Ladies and gentlemen, we're going to be starting here in about 10 minutes, okay, with Chief Market Strategist Matt Maley. He's been in Wall Street for about 40 years. A lot of you guys already know him or have seen him on CNBC or Bloomberg. So we are basically just waiting here for Matt to pop in. Make sure that you're paying attention. We are going to cover a lot of different topics: stocks, options, trade ideas, setups, technicals, fundamentals, market discussions, crypto, everything. And you can also post a question if you want in the chat. And just to give you guys a heads up, in 10 minutes, we're going to get this thing rolling, all right? Big shout out to Manny on the YouTube chat. What's up, dude? All right, all right. Ladies and gents, welcome to the session here. My name is Rodrigo. I'm going to be here with you today, and we're going to be here with Matt Maley, Chief Market Strategist at Miller Tabak. In the chat, let me know when you guys are ready to start. I see that KB is in the house. Shout out to Norman, Peter, Roman, good to see you here. Sub, Terry, what's going on, folks? On the YouTube side also, Manny, you're getting 2 shout outs. Let's go, dude. All right. A lot of great folks here today. We have a lot of members here as well. It looks like only Blount is ready. So Blount, we're going to go into a private session just with you because you're the only one that's ready. Just kidding. But okay, Gary says Grand Rising afternoon, Benzinga family. Yes, this is the Benzinga family. If you don't know about it, now you know. And if you've never seen this before, you don't want to miss it. Trust me on this. So in the chat, go ahead and throw me a 1 if you are ready. I'm sorry, forget that. Throw me a 1 if you've never been here before, and throw me a 2 if you've already been here before. Okay, that way we know how to move the conversation, right? So that we don't overwhelm you guys and it's not too confusing and all that stuff. But yeah, folks, we're going to be talking about trade ideas, options education, technicals, fundamentals, market discussions. We're going to talk about the whole crypto collapse, whatever's going on there, all that sort of stuff. And we're looking at it from Matt Maley's perspective, right? A chief market strategist. So let's go ahead and bring on Matt. I think he's in the house. Let's give him a proper introduction, folks. Let's welcome Matt here into the house. Let's go.
Damn, son, where'd you find this?
All right. How you doing, Matt?
Good. What's going on, Rodrigo? How are you?
I'm doing good, man. This week it has been insane, but then like we say that every week, and it just keeps getting crazier. So, oh, sorry about that. Wait. Okay, yeah, there's a bunch of different air horns going on here. But yeah, man, this it's like every week, you know, it gets crazier and crazier. And the whole thing that's happening with crypto, Matt, I know a lot of folks here definitely want to hear your take on all this. So, and we will get to that, folks. But we do want to let you know, Matt Maley, you know, he's a chief market strategist. He's on Bloomberg, CNBC, but he has a live trading room where he's actually profiting from this volatility. And it's great. And if you're new, we're going to show you exactly how he does it. Okay, exactly how Matt is able to profit from all this stuff. And we have a lot of ones in the chat. So a lot of people here that are here for the first time, Matt. So maybe we can get a quick introduction of your background, and then we can kind of move on into showing them how you're actually able to profit from these swings.
Sounds good, Rodrigo. Thanks a lot. And thanks for joining us here this afternoon in an unbelievable, I was going to say, crazy time for the market. It's been a crazy year for the market, and it's going to continue to be that way, which is great for active traders. And you know, we all want those. You know, we have a certain part of our portfolio that's long term, and you know, thinking 3-5 years out or even longer. But for those of us who like to really want to maximize our profits and our returns, if you have the time and inclination to trade a little bit more actively, it can be. This is the type of situation that makes it unbelievably profitable, and it has been really profitable for us in the chat room this year. But my background, you know, I started almost 40 years, literally be 40 years in 2 weeks. And back in the early 1980s, I joined Salomon Brothers, which at the time was the biggest and most important trading desk on Wall Street. And it was really through the 70s, 80s, and 90s. And I was there for 15 years in the 80s and 90s, and then another 10 years on the biggest trading desk on Wall Street, and certainly one of the most important ones as well, which was Merrill Lynch. And that was on the institutional desk. And as a trader, I covered some of the biggest institutional trading desks in the world, whether it be Fidelity, the biggest mutual fund, BlackRock, the biggest hedge fund, banks, insurance companies, you name it. I covered those desks. And again, these are very sophisticated institutions, very sophisticated investors. And I learned about how things are supposed to happen. You know, I've been a strategist now for 15 years or so. But you know, and a lot of the strategists on Wall Street are really more on the theoretical side. What should be happening? I mean, most of those, the vast majority of them at the beginning of this year were saying, don't worry about the Fed tightening, everything's going to be fine. Maybe we'll get a little bit of a dip, 5 to 7%. but it won't be a big problem. I was saying just the opposite, saying it was going to be a big problem and it would cause a bear market. And that's exactly what we've got. And the reason I was able to do that is because I knew I don't just use the theoretical textbook stuff. I wasn't an economist. I wasn't a, a sector analyst. I was a trader. Again, for 25 years. So I learned about trying to figure out not what should happen, but what is going to happen. Okay, what is taking place now and what is going to take place going forward, not what we think should happen, what the Fed should be doing right now, or and what impact it should have in the future. I mean, so many people right now they spent all last summer telling us how the Fed's doing this wrong, doing that wrong. I'm like, I agree to a certain extent what they're doing is wrong, but I don't care. They're doing it, and they're going to continue to do it, and that's why the market, we were able to profit when the stock market rolled back over after the summer rally and hit new lows for the year. We profited in a big way, where so many other the pundits on Wall Street were saying that the thing's going to be, that the bear market was over, and you ought to buy with both hands. Well, they've been very, very badly. So again, that's my background, and I think that's really. When I've made this shift, and I still talk to all these institutional investors all the time. Last week, I spoke with Carl Icahn for 20 minutes, or he called me, asked me my opinion on how things were going last week with all the things that were going on. But I still, I love now working with with individual investors because we have the tools now to invest in the same way that institutional players can, because we have weekly options. We have in the indexes, the S&P 500, the NASDAQ, we have options that expire 3 times a week. But in big cap names, it's not just the Apples of the world. All of the higher cap names have weekly options. And then of course we have ETFs. Inverse ETFs. We have leveraged ETFs. We have options on all of these ETFs, and it allows individual traders to make these kind of short-term bets that only institutional players could do in the past. And so what we saw this past week was incredibly volatile. It's going to continue to be volatile, and we're going to be able to continue to profit from these trades in a year where most people are really feeling a lot of pain.
Right, definitely. I mean, the one thing that I would tell anybody, if you're new, focus, try to find a community, right, that has a great mentor and educator and somebody with experience like Matt. Like most people with Matt's 40 years, is it you already made the 40 years? 40
years at the end of the November 29th will be 40 years.
We will throw a party in the chat room. We'll have a party for you in the chat room.
There you go.
But yeah, most people that have that kind of experience are already retired. And you do this because you're passionate. This is what you've been doing like forever, right? So
exactly. It's something I love. I laugh when people ask me when you retire. It's like I enjoy it too much. It's something I'll probably do until they pull they yank me off with a hook. But yeah, and the thing that makes me so that I love so much about it is it's ever changing. So many people, I mean, they complain about the good old days. I'm like, well, I like the good old days too, but they're gone. And what I love is keeping in touch with all these things. I mean, there's so many things that changed with these ETFs. I mean, in the old days, somebody like me would be concentrating solely on U.S. stocks and U.S. stocks indexes and things like that. But with all of these new tools and my overall background, we've been able to make money in whether currency ETFs, in bond ETFs, in high yield bond ETFs, in the FXI, which is our biggest one, China ETFs for other countries, and all sorts of different markets, and it's people think too much about, geez, I want to find the next Apple computer or whatever it might be, and that's great. Believe me, we always want to be looking for that, but there's so many other opportunities. And in the past, they were like, well, geez, what am I going to do? How am I going to buy? Geez, I got to try to find some broker in Hong Kong who's going to take my order and they're going to do the currency swap for me, and then I'm going to make a bet on China's stock market. Who had the time for that? And it would cost you too much money to get it done. Now it's like, boom, those ETFs are out there. I can get it done. And so we're following those things all the time. And we're making money in many different markets around the world, and among many different asset classes, which is the key, because if you're focused on just a small sector, every once in a while that sector will suddenly go out of favor and do nothing for a while, trade sideways, and there's no opportunities at all. Well, Then what the hell do you do? Now we have the opportunities. So I've just loved being able to kind of grow with the business and keep up to date with it. And it's something I've been very passionate about for a long, long time. Oops. Can't hear you there, Rodrigo.
Yeah, sorry about that, man. Yeah, so yeah, that's the thing, folks. So just kind of get ready to what we're going to be covering today. What you're seeing right now is basically the live room where Matt is posting entries and exits. I think you can go ahead and start sharing, Matt. But so folks, just to kind of give you a breakdown of what we will be covering right now, we will be going over and showing you how Matt is able to profit from the volatility. Okay. From there, we're going to have discussions on the markets and take questions and all that stuff at the end, review stocks. But for the time being, we're going to show you exactly why you should even be listening to Matt, right? Like why you should listen to Matt. Is he actually making these trades? So we're going to show you all this stuff right now, folks.
Yeah, here we'll just we'll show you a very simple thing that took place in the past week. This is the chart on gold in gold. So let me just take this down so you can see it. And I want to make this chart a little less busy. Get some of the lines out of there. But so this is what was happening. I mean, we all know, it spent a lot of time. Well, it was funny. At the first half of the year, everybody was talking about, why isn't gold working? Why isn't gold working? It's been a great hedge against inflation for 5,000 years. Why isn't it working now? And and my point was that, something, I think it will eventually work. But the great thing is, why try to make it happen? We cannot make it happen. That's what so many people try to do sometimes. Let's wait for the market to go ahead. Let's keep an eye on it, but let's concentrate on these and other things, the things that are working. And then when it does look like it's going to come to play, we're going to jump on board. And that's what happened in the gold market. And then, of course, this past week, a lot of it happened because we would always, a lot of people were talking about gold's not working because the crypto markets are the ones that are now becoming the inflation hedge. Well, it didn't take long to find out that wasn't working. But even when that wasn't working, neither was gold. But this past week, and we'll talk about a lot more further in a little bit about what happened in the crypto market and what it means and what it means, what the crypto market's going to do going forward. But when that thing finally, when that crashed and we all saw the thing fall apart last week, gold finally broke out. And this is what we did. So there was a situation where I took the fundamental outlook, and again, I try to combine all things, because if all you do is look at the fundamentals, that's the theoretical stuff. That's good and that's important, but we know that sometimes and I've said this a gazillion times, I say it again, the market, you'll hear it all the time on these financial outlets. Yeah, and they're right, but not really. It's like the markets are always right. You're like, no, the markets are only always right eventually. I mean, was the market right in 1999 when the market was through the roof and trading at 30 times earnings? Of course not. That's what the fact that the market is wrong all the time for a while is what gives us these unbelievable opportunities. Well, the market was wrong on gold. They just kept saying, "Oh, we don't believe in gold. We don't believe in gold." But we can't make it rally. You have to wait for it to get real signals. Well, sure enough, we came in here, and so we had the fundamental backdrop saying gold has been a fundamental good quality hedge against inflation for a long, long time. But what happened here? Look how we kept making. Then we looked at the technical situation. It continued to look horrible. Higher, see that? It made a high there, then made a lower high, lower low, lower high, lower low. There's nothing worse than lower highs and lower lows. Nothing better on the opposite side than higher lows and higher highs. That's very bullish. But here we are. So we have a situation here. We came in here and it finally bottomed. Okay, it made another lower high, but it didn't make a lower low. So we started looking at it about a week ago. Okay, and I said, look at this thing. I'm sorry, about a month ago. But we're just on the side. Say, hey, look, we didn't make a lower low there. And they rallied up, didn't make a higher high. Okay, but again, we didn't make it was another time we didn't make another low, forming a nice base on the technical side of things. But then I also look at this yellow line. I'm going to get rid of the purple line for a second. I can bring it back. That's the two. But the yellow line is the 50-day moving average. And you see how incredibly important that was? The 50-day moving average as a resistance level, got right up to it there, failed. It got slightly over it. That's one thing. It's always a rule in technical analysis. Whenever you break above a resistance level, or slightly below a support level. That's not enough. You need a meaningful break above the resistance level and a meaningful break below a support level to make it a compelling move. Well, this was not a meaningful break. Within 2 to 3 days, it failed. It showed that 50-day moving average, even though it was broken very slightly, was still important resistance. It got up to it again there, and then again, and then again. So we got 1, 2, 3, 4, 5 different times. Even you can include this one as the 6th time. So we're sitting there going, okay, 50-day moving average, no question, rock solid resistance. But at some points it's going to break it. And when it does, we're going to jump on board. And sure enough, we came in here. We actually bought the GLD, and it's like, well, geez, it's up so much. I said, watch, it'll take a breather for a day. Don't worry about it. But once we break above this 50-day moving average, it's going to run. So we went in and we bought the GOLD, okay, which is Barrick Gold. That is the symbol for Barrick Gold. So so we're looking at that as the common stock. But people were also looking at options in the GLD, which is the gold ETF, and the gold and the Barrick Gold call options. And the stock just, as you can see, well, there's you can see what happened with the gold. The thing just took off. And not only that, not only did it break above its 50-day moving average, it also made a higher high, its first higher high since March. That is so bullish. Now, I just want to pull up another one here before we get here. Yes, commodity. This just gives you a good idea on what my thought process is. Another thing that took place was down here. Remember when we got it? We bought this thing actually before it broke its 50-day moving average. We bought a little bit, and then we really added on to it when we got the confirmation. Again, let me get rid of some of these lines so the chart doesn't look so darn busy. Oops, I got the wrong one. I got rid of the 200-day one to get rid of there we go. There's the 50. But see this is what's called a MACD chart. Now, again, one of the things that we, it's great. This is such a great example because we can talk a lot about what we do in the chat room because a lot of it is also very educational. So no, what the hell's a MACD chart? Okay, well, basically what it is it's an indicator of a change in the short-term momentum. Okay, and we have long-term momentum indicators. In other words, I'm sure a lot of you have heard in the past of a golden cross or a death cross. A golden cross is when the 50-day moving average of an asset crosses above its 200-day moving average. And the death cross is just the opposite, when the 50-day moving average crosses below the 200-day moving average. And that doesn't happen, right? It's not a turning point. It happens after. We got to see their moving averages that go back several weeks. The thing has to be going down for a while for the death cross to take place. It has to be going up for a while for the golden cross to take place. But it gives you that confirmation that, hey, that little bounce we've seen here, it's not just a little dead cat bounce. This is only going to last for a couple of days. It's something that's for real. And this is what we hear on a little bit shorter term basis on these MACD charts. And what they show, they take a shorter term thing. They take the 12-day and the 26-day moving averages, the exponential moving averages. And you can see here, it was seeing a positive cross. And so I went to the people in the chat room and said, look at all the times. See that positive cross we see right there that took place? And the thing rallied very nicely. See that positive cross? Another nice rally. And you're saying, okay, well, that doesn't necessarily mean we'll see a big rally, a sustainable rally. No, but still, you see a 7% rally in gold. That means the options in these gold stocks are going to go up a couple of 100%. And that's exactly what happened here. So we bought these things. We bought GOLD. We bought the GLD ETF. And we bought the options, and we doubled down when it broke the 50-day moving average. So a couple of different indicators. We already had that fundamental thing that we knew that, hey, I know it hasn't worked all year as an inflation hedge, but it's worked for 5,000 years. So let's not just dismiss it. Let's keep it in the back of our minds. Let's not, so many people say, oh, this is it. And I kept saying, not yet, not yet, not yet. And then we finally got it. And that's when we made the big money. And so just to show you that what we do, we think about it fundamentally, technically, we look at positioning, we look at sentiment, we look at technical analysis, and then then we talk about education. So we're teaching people that, hey, you got a great idea, Matt, that's fine, but how the hell did you get there so that I can make the decision on my own the next time, or with help from other people. So right. I think that's really a good example of what we do here in the chat room.
So now I know that you also have a Tuesday session. Can you tell us a little bit what goes down there, Matt?
Yeah, speaking of the education, we do spend a lot of time. We have a thing on Tuesday. We're in this chat room all day long, and from about 9 o'clock ish, depending on if there's some big news out. I'll get in there earlier at 8:30 in the morning, whatever. But we're there. I want to get there before the market opens, and so we're there for kind of 9 to 5, 9 o'clock to 4:30 ish Eastern time. In other words, the market's open from 9:30 to 4, so I get on a half an hour early, sometimes a little bit earlier, and stay on until about 5. And but we have this thing once a week, where a Zoom call, much like this, where we just talk about all sorts of different things. Again, some of it's education. One time we talked about, it was kind of funny because this Head and Shoulders is a very common and very important and very good a technical pattern to keep an eye on when you see it. And some people had a little bit of a misunderstanding of what a Head and Shoulders pattern entailed. And so I took 10, 15 minutes in the Tuesday Zoom call to go over that. But again, this is something that goes on. Well, if it's usually half hour, 45 minutes at least, sometimes goes a full hour. And we talk about, again, people have questions beforehand. Hey, Matt, the Zoom call's coming up. This has been going on in the currency market. Can you make sure to talk about that? And we'll do that. And then, of course, we talk about anything that's going on at the time in the overall market. Last week, it was kind of funny because the crypto market was just starting to break down on Tuesday when we talked about it then. And again, like I said, so it's kind of different every week. Some weeks it's more educational. Other weeks things are going so crazy in the marketplace that we're talking about specific trades. We're talking about hey, these 5 stocks, these 3 ETFs. And looking at the dollar ETF and 800 different things, and we talk about that. So right. It's just kind of we try to combine what we're doing, what the trades we're doing, why we're doing them, and also add some educational aspect to it. Again, we do that once a week in the late Tuesday morning.
The other thing there, Matt, is just to kind of let folks know really what you're doing here. You're basically short-term trading, near-term expiration calls or puts. However. The chat room has, like, people can ask whatever they want. They're not censored or anything like that. So if they want to ask you, hey, Matt, what's a good stock to buy and hold? Or what are, look at, these are the stocks that I'm holding on my portfolio. And I know we were talking about Google. I've been asking you all, like, for months and weeks, and your answer never changes, right? I've always asked you, Matt, if there would be one stock that you would just, buy and hold. It's always been Google. Is there a particular reason why that is?
Yeah, the main reason for that is that Google is cheap. I hate to say it, there's a bunch of stocks there which are great companies, and their stocks I think will become real good stocks, but they're like Apple Computer, but they're actually not that cheap. But we can pull up Google here. I'm gonna show you here. Equity, GP. I'm gonna show you its PE ratio. Hold on. There we go. Whoop. There we go. Okay. Okay, so now this is what we're talking about. Let me go back. Let's go back. Okay, now this is the chart. You see it's trading at 17.9. You can see that. I hope you can see that over here. 17.9 times earnings. Okay, now if you go back, whoops, what am I looking at here? Is this the right one? Oh, no wonder. I've got the wrong ones. Hold on a second. There we go. Okay, there we go. So this is the price earnings. It's 18 times earnings, right? Okay, and let's take it. Let's go back. Hold on a second here. There we go. Okay, here we go. See this? Look how cheap this was at the low. Okay, you go back to 2008, 2011, 2012. This stock has only been cheap. It's never been. It actually got down to that 2008 level. It's only been this cheap. Okay, this inexpensive 3 other times, and this is really the same time. But this was, of course, the great financial crisis, and this was the European crisis. But it kind of had two iterations to it. Remember, Greece looked like they were going to fail on their bonds, and so it had a double bottom there. But here we got lower. So when it's obviously the rally late last week has helped it move back up. But either way, it's like my thing was like saying, hey, if you want to buy Apple computers, this is the bottom, maybe. But if you buy Google now and spread it out by a little bit each month, you're not going to, you won't get the exact bottom, but boy, your price is going to look really good at the end of the day. 3 years from now, 5 years from now, you're going to be buying like it was here. And guess what? Here, but at the bottom of the obviously of the crisis, boom, boom, you buy it here, and then suddenly, a few years later, the stock is trading. Let's do it. So boom, stock is trading up 130%. Okay, and these are the types of things we want to be looking at. Okay, and in this case, it was like literally 3 years later, from 2012, 130%, more than doubled your money. And in this kind of situation today, it's going to go up even more. So to answer your question, Rodrigo, the reason why I chose Google is simply because not only is it a great company, because stocks of great companies aren't always great stocks at times. Sometimes they get way ahead of themselves, and sometimes stocks of lousy companies are really good because they get really oversold or really inexpensive. So that's why I really like Google, and people ask me that about it all the time, and they'll ask me about other stocks. Hey, you bought Chevron when it was trading with paying a 7% dividend. Now it's only paying a 3% dividend. What do you think? And we talk about that. I do still like Chevron, but it's a the dividend didn't shrink. It's just the stock went up. Their dividend keeps growing. Don't get me wrong.
Right. No, yeah, it's just, I just wanted to kind of point out there that you really have different ways that you can trade with folks, not just for I think we lost Matt there for a bit. Is the chat working? Am I connected? Can you guys hear me? What's up, Tim? Let me know if you can hear me on the chat. Okay, so I'm online. I'm good. My internet is fine. Okay. That's good because I just had my internet installed here. I think it was like Friday. I've been working from coffee shops for a whole week. So I wanted to make sure that my internet is fine. I think Matt got disconnected. He's probably going to get back in here. 1 sec. All right, so yeah, so there must have been some sort of issue with Matt's internet, but we're gonna get him right back here. Yes, okay, so we're connected. We are online. Yeah, well, I'm sharing my screen, but I mean, Matt is not here though. Something happened with his internet. Not sure what it is, but we're gonna get him right back on here. No worries, folks. But that's pretty much what we're kind of going over, like some of the trade ideas that Matt has done, and really his overall market opinion, right? How he looks at the markets right now. And we're getting a hold of Matt just to make sure that he can get back in there. It must be some sort of internet issue. I hope he knows he's logged out. He's not still. Okay, in the meantime, I'm going to show you some of the trades that he's made while we wait for Matt to get back in here. Let's see some of the trades. Just for you to kind of get a sense of how the format is. All right, so let's look at some of the most recent ones. So just for you to kind of get a sense of the format, he had a hip surgery, I believe, on Wednesday. VWAP, so a little bit of education stuff here, right? Go ahead and buy Apple puts. So you can see he's very specific, right? He's telling you exactly what he's going to buy, the ticker symbol, the strike price, the expiration. That's basically all you need to get the trade done, right? Even if you're new, even if you're a beginner, this is really the easiest way, really. And look, here's the trade. Here's the trade. Here's literally the trade that he was talking about, gold. So everything is posted in the chat room, entries, exits, and market discussions. This is only basically like the where you will get his trades, right? But he does have that Sunday session which is for people that, for example, want to get a little bit more of Matt, even though you see him on Bloomberg or CNBC or any of these places. All right, there we go. We got Matt back in the house.
All right, we okay, Rodrigo?
All right. We got Matt back in the house.
Sorry about that. I don't know what happened. I got disconnected somehow, but
Well, I mean, yeah. No worries. It's all good. What were you talking about there? The gold, right?
we were just talking about we're talking about Google a little bit and why did we? I don't know how far before I got disconnected on Google, but I talked about how the reason why I like Google is because
somebody must not like Google.
Yeah, really. Hold on one sec. The reason is that it's just very, very cheap when you look at it. There we go. When you look at it on a fundamental basis, it's only been this cheap three other times, and so it's like, will it bounce back immediately? Will it go up a lot from here? It's going to go up a lot from here eventually. And so my thing has been saying, go ahead and buy this stock now, and buy it, piece by piece, kind of ease your way into it over the next several months. And believe me, 3 years from now, you're going to look really, really good. Because, like I said, this stock is trading at 18. Got down to 17 times earnings. It never traded. It's only traded that low at the depths of the recession. I'm sorry, the Great Recession. The Great Financial Crisis. Then again in 2011, and then again one more time in 2012. That was during the European crisis when Greece was everybody was worried that Greece would default on their debt. But other than that, but again, this is something that we talk about in the chat room all the time. Is that we want to be able to talk about. What do you like? And this is not. Well, I liked it on a short-term basis as well. But the whole point was that I was just saying, hey, listen. This stock is one that we talk a lot about short-term trades, but let's talk about longer-term ones as well. And again, I'll put it right up here. Oops. I'll put it here. You can see it. Price, earnings, bang, and there we are. And you go back to 2007, and you can see that the stock has only been this cheap. But at the bottom has only been this cheap. Again, 2008, 2011, 2012. So this is a great stock. And again, this is something we talk about on a regular basis in the chat room. I mean, again, we do kind of focus on the short-term trades, whether it be swing trades that will last for a couple of days, or just some intraday trades, some day trades. But we definitely talk about longer-term stuff all the time, and people are free to ask me about those issues at any time, and they do pretty much every day.
Right. And that's the thing, you talk about diversification, you talk about a lot of educational things that, it's not just like some trade alert service. There's so much that goes into this. And also your 40 years of experience in Wall Street, keeping it real with the folks, right? So why do you think it's important for folks to maybe not listen too much to the mainstream news, I guess, and kind of focus with an actual instructor mentor?
Well, I mean, and again, there's nothing wrong with, I suppose, with listening to the mainstream press, and you want to keep an eye on what's going on in the world. But I hate to say it, and again, the financial press is good as if the people they have on, and these people who they interview, and they work for the brokerage firms and they work for the money managers, these institutional money managers. And what do? They're paid to be bullish. That's their job. I mean, they've been fighting this all the way down. I mean, with very few exceptions, they've been saying, they told you that don't worry about the Fed tightening. Interest rates are still low. Don't worry about inflation. It's not gonna stay high. All these different things. And the stock market's been completely croaked. And they'll always tell. And even when they're, stock comes down, the stock opens, they'll say, hey, a stock is down, the stock was down 30%. They reported lousy earnings, or it just dropped another 20%, avoid it. Well, that's helpful. Stock's down 50%. Now you're telling me to avoid it. Well, what good is that? And so I just, it's these people I know, believe me, I've been approached by them to come work for them. And it's like, your job is to keep people confident and keeping their money with us. It's not necessarily telling me to think the market's going. And I said, no, Mo Tapeback lets me tell me what people think. And if I'm bullish, I can be bullish. And if I'm bearish, I can be bearish. And but again, we have different, and we have, during the first half of this year, when I was very bearish on the stock market. We made a lot of money on a lot of different negative bets, but we also made money on the bullish side in the energy sector, because I turned bullish on the energy sector pretty much before anybody else in October of 2020. But I remained that way, and then people were saying, "Well, how could you be bullish on the energy sector if you think the overall market's going to go down?" And we talked about that in the chat room and in our Tuesday sessions, and of course that worked out extremely well. And then the very end of May, early June, when I realized that they had gotten overbought and the sentiment had become too bullish on the group, we went ahead and shifted our stance and bought some puts on the XLE, the ETF for the energy sector, and we made several 100%. I mean, it's the type of things you can make money on both sides. That's what active traders want to do. I mean, even though we remain bullish and do remain bullish on the energy sector, we've had several times this year where we've made 200, 300, 400% in the XLE puts, just to, not as a hedge. It's like, hey, we still like them. I'm not going to sell. I mean, I still like Chevron. I don't want to sell it, but I'm going to take it. But it's probably going to dip here since Chevron's a long-term holding for me. I'm not going to sell it. I'm going to hold on to it, but I'm still going to take advantage of it by buying some XLE puts. We bought those. Thing went down. A couple of days later, we took our profits and moved on. So this is what active trading is all about. You have core positions, you trade around them, and then you have opportunities that can come up all the time in either direction, bull or bear, and you jump on them when you can.
And Matt, we're getting flooded with questions about your live room. Let me just go over this really quick, and then I want to ask you a couple of questions about crypto, and we're gonna get saucy here with the markets. All right. And folks, thanks a lot for sending these questions, by the way. Does Matt go over student trade ideas? Yes, we've actually had some solid trade ideas from the students. Matt will cover that later. Snapchat, Target, Amazon, we'll cover that later. Does everybody that joined get a free laptop? Yes, everybody. That's till midnight. The chat room schedule, it's open Monday to Friday, 9 8. Well, it's open 24/7, but Matt is there Monday to Friday, 9 to 5. Let's see, the price at renewal will be the same as today, 70% off till midnight. Does Matt provide education? Yes, we provide a lot of education, and not just in the chat, through market discussions, but also during the Tuesday session. Let's see, how much capital is required to make the trades? Many of these contracts that we're buying here, we're talking about $1 or less. So these are not, you're not buying, like hugely priced, and they're very low premium because they're near-term expiration, because again, we're trading these, right? So let's see, does Matt help with stocks? Yes, you can ask Matt any question about stocks as well. And does Matt cover commodities, crypto options? Yes, yes, Matt covers everything. He's made trades, like he said, with the FXI, which is the Chinese ETF, trades with commodities, trades even going long on the dollar. So you don't have to go and try to get some shady like Forex trading account in the Bahamas to make any of these trades. And you can do this like knowing, right, how you can do it from a normal trading platform. So, okay, we covered some of these things. And if anybody has questions on the room, put them in the chat. I'll post the link so you guys can join. And we will have push notifications ready very soon. These will be going to your phone if you download the app. But again, they're not ready right now, but they will be very soon, within a month or two, around there. All right, Matt. So this whole the Sam kid, right? I've heard everything from this guy playing League of Legends during a board of directors meeting, a whole stuff that just really makes me wonder, like, how did this guy pull this off? What do you think are going to be the consequences of all this? Like, a lot of people think that they're confused. Was this a scam? Was he scamming people? There's a lot of weird reports. Even the Bitcoin volume half of it was fake. Is it crumbling down? Was this really a scam or no? Like, what's going on?
Well, the hardest thing, of course, to figure out, the most important thing to know about what has happened here is that, the most important result has been a loss of confidence, a major loss of confidence. So we have to be very, very careful about what's going to happen next. Do you really want to buy, come in here and buy this thing at 16,000? I mean, look at the bounce. It's not bouncing back this weekend. You can see it's trading. It's only down $300. But all the stuff that you just mentioned is very, very concerning, because it just takes all sorts of credibility away from the marketplace, from the entire asset class, and it's going to take time to restore it. So that's why I'm not one to say that you should be backing up the truck and thinking that this thing's going to go to 100,000 or whatever. I mean, even if you think it's going to 100,000 some day down the road, it's going to be a while before it catches its breath, because we have you absolutely positively know now that regulation is coming in a major, major way. That and a lot of people are saying that's going to be very bullish. That's great. But you know how long it takes to pass legislation to get this regulation to put into place? I mean, it's not happening in a week or two. Okay, it would be lucky to happen in several months. And so a lot of the big money that can push this thing a lot higher at some point down the road isn't coming into this thing for a long time, until they're sure the regulations in place.
Right.
They understand the regulations. So to say, was it a complete scam? I don't think so. What was this guy doing? Well, I guess we're going to learn a lot more. But I mean, what he did is what so many other people do. He took money that he thought that he borrowed against his client's money. And
isn't that what Bernie Madoff did, or something similar?
I mean, it's to a certain degree. Bernie Madoff different, but he was just, it was more, it's a Ponzi scheme when you're just taking new money to pay back your existing investors. This was a situation where he took the money that he had and he took loans against it, and major loans against it, about 80% from what I understand. And so suddenly it's like, if this thing falls, it doesn't have to fall very much, or suddenly the people say, I want my loan back. And they say, well, I don't have it because what I borrowed, it's like this thing, I'm borrowing against a house. You buy a house and it's $100,000 house. Well, this was $1 million house, round number, $1 million house, and you borrow $800,000 against it, and suddenly the house is worth $700,000. You're screwed, because you owe $800,000. Okay, so even if you sell the house, you're only going to have $700,000, and so you're going to still owe $100,000. And this what seems to be what this guy did. There's some people trying to say that did he really do it purposely? Did he know he was? Did he really feel confident, and that's why he borrowed against it? I don't know. It's going to be a long time before this whole thing plays out. But
yeah,
this is not what we want to be jumping back into with both feet. There's too many other things going on in the marketplace that we can profit on than trying to take a big swing at something like this.
Yeah. So basically, all these people woke up that had accounts with FTX. They woke up with $0 and can't take anything out. But it's just really interesting to see how this started with Voyager Capital, then it went to Celsius, and now FTX, and now I'm even seeing on the news that something with Binance. So I just don't if this continues, right? Regulation can happen, but what do you think could happen as far as the price of Bitcoin? Because I had a dream 2 months ago that Bitcoin was under 10K. And
well, it was funny. You asked me that a month or two ago, and I said, geez, I'm bearish. I want to stay away from it. But I also said 10,000. That seems like a little much. Well, that doesn't seem like much anymore, does it? I think it could very easily fall that far. And again, the key thing, one of the key things that people, you have to understand, it's like, what is it worth and all this other stuff, but we have to know where the buyers and sellers stand. That's so important. One of the reasons why Bitcoin was able to go from 20,000 to 60,000 a couple of years ago was because the institutional money finally started coming in. Okay. Institutional money isn't going to touch this for a long time until the regulation, again, I'm not saying it'll be years, but until the regulations place, it ain't going to be in the next 6 months. Now, can this thing jump 20%, 30% in a couple of days? Sure. What's the timing of that? I don't know. But for that sustainable rally, everybody look at it, had huge rallies all the way down back in here in the first half of this year. I think it's going to go to 10,000, and the institutional money is pouring out of it. You're at the end of the year. If you're an institution, you cannot be owning this thing at the end of the year. Okay, you don't. I mean, can you own a little bit? Fine, but and I'm not talking about just FXI, cryptocurrencies, because of the scandal involved. It looks bad. And there's some things it's like, I need to be, this is a really good bull market. I need to be owning Apple Computer at the end of the year. So they keep buying more and more and more at the end of the year. Well, in a down market, that's like, what do I have to sell? What looks bad? What are they, when customers open up their statement in January, are they going to sit there and go, what the hell are these people still owning Bitcoin for? If I want to buy Bitcoin, I'll buy it myself. But I'm not going to. I'm here for you to buy Apple Computer and whatever happens to be Microsoft and 3M and JP Morgan, whatever happens to be this Bitcoin thing. And now it's in a scandal, and now it might be a whole illegality involved. You shouldn't own any of this. And and again, these guys are not loaded to the gills, thankfully. These institutions are not loaded to the gills, so we're not worried about this thing going to 5,000 by next Friday. But what they do own, they're going to keep peeling off because they want to have the least amount at the end of the year. So we could get a bounce on any given day, but there'll be a lot more sellers than buyers between now and the end of the year.
Do you think so? Where do you think that Bitcoin gets attractive, or it's just not attractive at all, regardless right now?
Right now, I just think it's not attractive, and it's one of those things where I just don't, the risk reward isn't there. I mean, I'd be surprised if it's bound right here. I guess my point is, if this is the bottom, that's fine, but it's going to stay down here for a long time. And then at some point later, okay, it's at 16,000. Who cares if you buy it? If it's going to 100,000, who cares if you buy it at 18,000? I mean, yeah, you'll miss it a little bit, but 6 months from now, a year from now, when the regulation is in and people feel much more comfortable, then you say, okay, there's certain things. It's like Apple Computer. Apple Computer is a great company. When it makes its bottom in this bear market and it goes up, you're going to say, damn, I wish I had bought it. This one is going to be like, no, you're going to, because it's going to, at some point, it's just going to shoot straight up. This one's going to take a long time to get moving higher. So I'm not, I think it could easily go to 10,000. Now let's just go back to a long-term chart. This is the Bitcoin. And I'll look at some, just to give you an idea of I'm going to go back to 2000.
Yeah, I saw a list of, I pulled up a list of the funds that were on FTX, and you have everything from Tiger Global, Sequoia Capital.
Right.
Tiger Global, those guys are feeling it.
Yeah, it really is. I mean, and the thing about Tiger Global is Tiger Global is, if anybody sits there and starts saying Tiger Global is a bunch of scumbags or did this, people, they are not. I mean, they're hardworking guys and they've had very tough returns, but at least they could say people are wrong. It's okay to say you're wrong. To say you've done illegal things, that's a whole different shooting match. Okay, but look at this thing. And I mean, you're basically, since we broke below 20,000. Remember that was the high in 2017. I mean, you could easily drop down to the lows. We break below this level here. I mean, this is what it was called a Fibonacci retracement. Again, this is something we talk about in our educational sections. But here it is. I mean, you're looking at 5,000. You're looking at below 5,000, and that is very doable. And again, that's not my prediction. I'm not saying go short it because it's going to drop like that. But I'm just saying that this is something that is very possible, and it's something I want to stay away from. And believe me, there have been times where I've seen things get absolutely crushed, and I've said, this is way overdone. Let's step to the plate. I like to be a contrarian. And if you're a contrarian right now saying, you'd be an unbelievable contrarian to say back up the truck and buy Bitcoin now. But there's one thing about being a contrarian and one thing about being irresponsible. I think it would be irresponsible to back up the truck and even to buy it. And again, if you want to take a lottery ticket and spend an amount of money that you don't care if you lose all of it, that go ahead, fine. That's fine. But that's not what we're any kind of money where you could easily lose 50% of your money like that.
So I guess we can thank Jay Powell for this, but I guess something good came out of what he's doing, where he's possibly exposing this whole thing with crypto, maybe.
Well, I mean, part of it is, you could say both ways. I mean, the huge amount of liquidity they provided to the system helped the cryptocurrency rally much more than it should have. But yeah, I mean, it was a liquidity asset, and a lot of people put this whole blockchain technology. There's a lot to this. So this is not tulips. where there's just, great, you bought some tulips, they're going to die in a week. It's so I don't want to put it in that kind of same category. But what Powell is doing, the key thing, so many people spend way too much time. If there's anything I've done and helped investors this year, and we have profited very handsomely this year while most people have been losing money, the one thing we've been able to do is say, whatever you think Powell should be doing, let's do what he is doing, okay? And the whole point, and I said at the beginning of the year, the people in the chat room who've been there since then will tell you, it's like the Fed, even if we didn't have inflation, the Fed has to tighten, okay? Because they had liquidity spigots wide open. You can't keep QE running forever, okay? You can't keep interest rates artificially low forever. You cannot, it's like an athlete trying to stay on steroids forever. At some point, they blow up and they die, okay? In this type of situation, we've got to remove the steroids at some point, whether we have inflation or not. And therefore, the stock market was always going to come down. What the Fed did was the right thing. The question is, and we can argue how long they should keep tightening, and should they stop already? That's fine. But what I focused on, and what I'm focused on right now, is that the Fed is still tightening, and they are very likely to, they're not going to completely pivot. And the only way the stock market can go back to what we saw in 2021, where you have 20 times earnings and 3 times sales, things like that, 22 times earnings, is if the Fed is actually providing liquidity and has interest rates artificially low. Okay, they are trying to get the markets back to equilibrium, and to do that, the market has got to go further. Even if they pause is not a pivot. Okay, the only way the market can go back up to 20 times earnings is if there's a lot of liquidity, and they're not going to do that. Okay, they may pause, they may stop. That's still not going to be enough. We go over earnings. I mean, you hear about this stuff on financial media. It's just ridiculous. They say, "Oh, don't worry, we're not going to have an earnings apocalypse." I'm like, so what? Earnings apocalypse was when earnings go down 50% or 80%, like they did in 2000 and 2008. The average decline during recession, I fully believe we're going to be headed for a recession. Average decline for earnings in recession is 27%. Okay. I'm not even looking for that. I'm only looking for a 10% decline in earnings next year. That means that the stock market, for it to go back down to what would be fairly valued, it's 15 to 16 times earnings, you've got to get into that 3,000, 3,200 range. People who say, don't worry about an earnings apocalypse, I'm saying, yeah, don't worry about an earnings apocalypse, but don't use that as a reason to be bullish. It's the same thing I said back in the spring when people are saying, something's going to blow up, so the Fed's going to have to pivot. I'm like, are you crazy? So if something blows up, the market will go down. Then they'll pivot, and then the market will go back up. You want to take advantage of it. Think about what the Fed is doing, not what some college professor is saying what they should be doing. Okay, if you're doing about, we care about what's going on in the market and will happen in the market going forward, not what should happen. And that's why we've been able to profit so well this year. That's why this rally. And we can talk about a few things that could help it rally even further in the near term. But it's not the bottom of this bear market. This bear market's not over. Every single bear market since World War II, and I think, and maybe since before World War II, I only went back to World War II. Every bear market, okay, has the stock market has moved from expensive to cheap. The stock market isn't even fairly valued yet, okay, much less.
Right. And Matt, I think did we lose Matt there? Are we connected? Am I connected? Can you guys hear me? Let me know in the chat if you guys can hear me, if you can hear this. Okay. So somebody doesn't want us to talk about crypto, apparently. Who knows who? But it looks like Matt lost his connection. We're going to wait for him to get back here. But guys, I told you it was going to be a pretty intense session. We're going to talk about a lot of different things. Matt, you got me there?
Okay, looks like I'm back. You got me here?
Yeah. My producers are telling me we can't talk bad about crypto. Just kidding.
But we just have to. One of the biggest things we have to remember is again, what are all the smart people saying? And I go back to the thing with what happened with Jamie Dimon, and I've talked about this in the past, but Jamie Dimon in 2016, which was 4 or 5 years after the crisis, and the market went down 15%, and people were still worried about the banks. And Jamie Dimon came out and said, "I'm not worried about the banks. In fact, I'm going to put $26 million of my own money into JP Morgan stock." Not a company buyback, his own money. Well, sure enough, the stock bottomed that day and never turned and went and rallied for the next 18 months. The stock market bottomed that day and rallied for the next 18 months. This year in the spring, when the market was down 15%, Jamie Dimon didn't say, "I'm buying my stock." He said, "A hurricane's coming batting down the hatches." And he's doubled down on that within the last 2 months. So when you get smart people like this telling you that, watch what they're doing. And that's what I care about. And I'll just go back to this thing that we've talked about many times, Rodrigo, but this time last year, it was almost exactly this time last year, it was Thanksgiving. I came out and I was telling people, Microsoft, you got to get out of your Microsoft stock. And it's like, it's a great company, but it's way overvalued. But that wasn't my real reason. My real reason is that the CEO, Sergio Nadella, sold $374 million of his stock. People don't do that. They only do that. He could, well, the market's going to go down 10%, 20%. He had ridden through plenty of that. He knew that he knew what the Fed was about to do. He knew that the stock was going to go down and stay down. Well, he saved himself over $120 million, $120 million because he sold right at the top. Now, he didn't sell 100% of it, but he sold a lot, 2/3. People,
they saw all this stuff coming, yeah. All right, so it looks like there might be an issue there with Matt's internet. He might be back here in a minute, but basically he was saying that, and I remember the session where Matt said, the biggest year of insider selling, and Nadella basically selling a huge chunk of his portfolio of Microsoft, and that's something that he has never done before. So it was pretty odd, right? But then again, remember, like, if you've been following Matt like I have for the past 2 years, he's been accurate with this stuff.
Okay,
when he talked about the
I don't know what the problem is. Anyway, can you hear me now again, buddy?
Yeah.
Sorry, but can you hear me now? But the thing about Mr. Nadella is, like, he ran a great company. Yeah, it was a great company for a long time, and then it wasn't so great a company. It fell, and then he for about almost 10 years. And then he came in and turned it back around again, made it one of the premier companies. It wasn't like he pushed up the stock by making false claims. The stock went up on its own. Again, the stock went up ridiculously amount because the Fed had put way too much liquidity into the system and kept it in their emergency levels of liquidity long after the emergency was over. And he saw the stock was way too high, and he said, I'm going to take some profits. So he did nothing wrong. Believe me, nothing remotely unethically wrong, nothing legally wrong, nothing unethically wrong. He just, again, if he came out and said, "Oh, by the way, we've been lying about our sales for 3 years," well, then he goes to jail. But that's not what happened. He done an unbelievable job. It's just what happens sometimes, and that's what people do. And again, as I've said many, many times, people who've heard me speak before, but that's what the smart people do when they see things get overvalued. Sam Zell, billionaire, a commercial real estate guy. All right. What did he do? It was a privately held company. He sold it to another privately held company right at the top of the real estate bubble. He saw what was going on, but real estate was his life. But he's like, this is insane. I'm getting out. I mean, Goldman Sachs, they took all these partners have been it's been a partnership for 100 years. But in 1999, they said, this is getting insane. We're going to sell our stock to the public. So they had an IPO. And guess what? Guess what happened a year later? 2000, the market went down. Blackstone was a great private equity firm. Summer of 2007, they realized what was going on. This is crazy. This is insane. We are going to take our company private. And it's the summer of 2007. 3 months later, the market topped out, and we fell into the great financial crisis. They didn't do anything unethically wrong, unlegally wrong. They just saw that their stock was way overvalued. The market had gotten way out of whack, and so they sold their company. This is what Mr. Nadella did last year. He sold his personal stake. I mean, they're already public now. Just because the company goes public doesn't mean that the CEOs or the people who run it or the partners are looking for a top. And we saw, many times companies go public because they just want more money to build their business. And of course, the greatest example is Microsoft. They went public, but the thing is, the CEO, Bill Gates, only sold $1 million worth of stock. he had tens of millions of dollars worth of stock. He said, no, I'm going to sell a little bit. And people joke that he only did that so he could move out of his mother's garage. But really, he kept saying, I'd be buying. I just need a little cash, so I'm going to sell $1 million. And of course, he held on to it, and it became hundreds of billions of dollars later on. So just because a company goes public, but when a public company goes a private company has been private for a long time, and they go public, and that's usually a sign of a top. The same thing happened with Mr. Nadella. And I do believe that the market's not cheap yet, and so that we still have some problems. The thing is, we have things going on in the marketplace. We saw the big rally last week. We're going to see what happens next week. We got some new news out of China that might help that market rally a little bit more. We're going to be trading that. We got the dollar getting, it's coming down. We're going to be trading that a lot. What's going on in these tech stocks? The semiconductor stocks have a nice bounce back. All their news is negative. Groups getting overbought. That's the one we're going to be looking at next week. I'm telling you, we got a lot of stuff we're going to be looking at in both directions. I'm just saying is that. So right now, I'm bearish. I think we're going to roll back over and we're going to make new lows before this market makes its ultimate bottom. But I'm not. But because I'm bearish doesn't mean we're not going to make bullish bets between now and whenever that bottom comes.
Right.
I think we'll make bigger bullish bets. But that's the whole thing about trading. And the biggest thing, and Rodrigo alluded to it earlier, is if you're trying to trade alone, it's just really tough. Professional traders, you go to the best and brightest hedge funds. They have trading desks. They have several traders on those trading desks. They sit in a big room. Some of these guys make millions of dollars a year. They don't have a private office that they sit in. They sit on a trading desk with all these other guys, men and women, so they can, hey, what are you seeing here? What are you seeing there? Hey, did you hear about this? Look at what happened there. And they're talking to each other. Then they also have brokers from their trading desks calling them from Merrill Lynch and Morgan Stanley and Goldman Sachs saying, hey, did you hear this? Hey, have you seen that? Look at this development. Look at that development. People are constantly talking to each other. If those people need to be talking to people, to others all the time, what do you think individual people need that who don't do this every day for a living? And that's what this chat room really provides. We get people talking to each other. And as Rodrigo mentioned, we've had some are you still there? Are you still there? Good. I thought for a second. I've had some unbelievable ideas. We can show you to them, but the FXI where we made 5,000. Well,
yeah, let's show them some of the stuff because we've been going on this stuff, but we want to show you exactly because Matt is posting entries and exits. At this point, you already know that Matt knows this stuff. He's probably the smartest person I know and most transparent out there as well in Wall Street that I know like that. So I think that as a retail trader, you really can't put a price tag on that because you really don't know, like if you're looking at a news or something like that, they're taking care of their sponsors. When you're looking at a chat room like this, we're taking care of our users. And that's why we don't care if the market goes up or down, we're going to make money either way. Right, Matt?
Right. Exactly. And that's the whole idea of, geez, I'm sorry here. I've got all these, you can see all these ones where we made a lot of money here. But I've lost my, you know what? It's probably further down here. Hold on. Oh, shoot. Okay, here, well, I'll tell you what, let's just talk about, I'm going to talk about this first, then we'll go on to the FXI, but we'll just talk about Apple here. Let me blow this up so you can see it. But to answer your question, Rodrigo, exactly. We're going to be talking to, shoot, there we go. Okay, now you can see it. This is what happened in Apple Computer this May, okay? This is the last time the cryptocurrency really got crushed, remember? And there was the Bitcoin and Ethereum were all getting, there was forced selling going on. And the problem was that people didn't have enough, those markets weren't liquid enough for them to raise the money they need to meet their margin calls. They owned it on leverage, they had leveraged their accounts. People came in and said, hey, we're giving you a margin call. You need to sell more Bitcoin. Well, in a lot of cases, they owned other cryptocurrencies that weren't even anywhere near as liquid as Bitcoin. And they said, well, geez, I can't raise that amount of money because there are no bids. This is a very illiquid, this particular crypto is very illiquid. Or Bitcoin which is more liquid, still wasn't liquid enough. And so they said, well, you gotta get it something. So you better sell something else because you need to have this money by the end of the day. So what were they doing that week? they were selling Apple Computer. At least that was my assumption. I had been in this business a long time. I had seen this happen in the past, where, one particular instance when long-term capital management had bonds they couldn't sell. So they went in and sold stocks. And that time was General Electric, which was one of the most important companies at the time in the late 1990s. And they just sold it to raise the money. Well, I figured to myself, now, what would these guys who own Bitcoin own? What kind of stocks would they own? Would they own General Motors? Would they own JP Morgan? No, they'd own Apple and they'd own Microsoft. Well, Apple was getting hit, getting crushed and crushed and crushed, down 10%, no new news. I'm like going, wait a minute, Apple Computer going 10%. There's got to be, for that to be a real reason for it to be going down, there'd have to be news. iPhone sales are down, whatever. There was none of that was out there. And so I said, I thought to myself, this is only being sold down because people are using it as a source of cash to meet their margin calls in the cryptocurrencies. Finally, on May 11th, the cryptocurrency market stabilized. And on the 12th, this was the very end of the day on the 11th, on the 12th, it stayed stabilized, but Apple went down again. And I realized that people don't have any idea what's going on. So at the end of the day, we came in and we bought Apple. And again, as Rodrigo said, we used specific calls. It's like, hey, you ought to look at Apple Computer here. It's probably a good buy. No, we came in and said, we're going to buy it. It's a Thursday. Whoopsie. There we go. We're going to buy the May 15th. So we give you the May 13th. I'm sorry. The actual expiration date. We bought these on the 12th. You can see down here, it was May 12th. The Apple, I said April because it was Apple. Apple, May 13th, $143 calls, because I knew the stock had been washed out. The margin calls were over. The forced selling was over, at least for a near-term basis. Therefore, the selling in Apple Computer was over, and the stock should bounce back. Sure enough, stock we bought. So in the last hour of trading, we bought those May 13th calls. The next day, we sold them after an hour and a half of trading up with a 414% profit. Now you could say, well, geez, you should have held on longer. You may have made it close to 500%. Okay, you're right. I didn't get the exact bottom. I didn't get the exact top. If you make 400% on anything and you get mad at yourself because you didn't make 450%, shouldn't be doing this because you'll drive yourself nuts. Okay, you're never, if once in a while you get the exact bottom, once in a while you get the exact top, maybe once in a lifetime you'll get both the exact bottom and exact top in one trade. But you take it, you pat yourself on the back and move on. And that's what we did. So this is the type of thing that we were talking about with the, so we're thinking outside the box. Everybody kind of getting tired of hearing that comment, but I'm just looking for the FX.
And in the meantime, while you find that, Matt, I just want to explain, folks, really how Matt does this. Okay. A lot of the people that you see on the news as, market strategists, they only focus on US equities, particularly, honestly, Apple, Tesla, Microsoft, Google. That's probably all they know. However, Matt is a global market strategist. So he's looking at global markets. That's how he was able to pin this FXI China ETF trade.
Right, exactly. And this is it. The one thing I just want to say, so here's the chart. I finally found it. Sorry about that. It's because I've been adding some charts to my thing, and so it was a different number than I realized. See, it says last weekend's chart. I got to put a new chart in there because it was last weekend's chart back in March. But everything else is absolutely accurate. Okay, so this is what happened. We came in. And, we talked a little bit earlier about the MACD chart and what that entails, the moving averages and stuff. This is the RSI chart, the Relative Strength Index. And it tells you, again, this is some of the things we do when it comes to education. When a stock is really oversold, the RSI gets down to 30 or below, the stock gets oversold, or in this case, an ETF. And the line is green on the chart. It's green because it's like, buy, go ahead, buy. That's mean it's getting oversold. You should buy it. When it gets up to 70 on its RSI, mathematical computation, that's stop. Stop. It's getting overbought. Don't buy it anymore. And you can see what happened here. See how the stock got down green? See how it rallied there? That was a nice bottom. See how it got overbought here? Sure enough, it sold off. Well, then, and the reason, on the fundamental basis, I was bearish on China all through 2021. And the reason was because they kept cracking down on all these different industries. Every month there was a new industry they went after. And but then in the beginning of this past year, the SEC came out and really slammed it. Said we're talking about we're talking about we're thinking about delisting some of your stocks. And the thing just fell out of bed. But then look at this RSI. See how it got oversold here? Look how oversold it got here. 14, most oversold reading ever. And I said, all right, tell me number one, it's oversold. So I'm looking at the technical conditions. I know the fundamental situation is still bad, but this is as oversold as you ever see anything. Number three, I also know the Chinese government, they are losing face because their stock market is flat on its back because of something. It's one thing to have it going down because they're cracking down. Here it's falling out of bed because of what the US did. And they're going to come in and support their market. They're going to plow their own money, government money, into the stock market to rally. And sure enough, the next day it rallied 27%. Okay, huge rally. And that's like, it'd be like the Dow Jones or the S&P rallying 27% one day. That's what happened. And this is what we bought. We bought on that, remember, on the 15th, right? We bought the FXI, March 18th, $30 calls. And in the, sorry here. Oops, what happened to it? There we go. Sorry. Most of us are reading ever. There we go. Sorry about that. And so, well, what happened the next day, it's like it opened up 1,000%. And I'm like, this particular call option. And I said, no, I'm not going to, usually 1,000%. Oh my God. And remember, I just said, hey, you got a nice profit, walk on. But I said, no, wait a minute. I know this is not going to be a one-off. This is not a meme stock. That I know the U.S., the China government is going to keep buying their market and make sure it not just rallies, but rallies strongly. So I held on for a couple hours. Then it was up 3,000%. And I said, okay, we got to take some of it off. We can't just keep going. So sure enough, we sold half our position. But I said, we got to hold the other half. Do not sell anymore because, again, you got to do risk management. That's a big part of the chat room, is using risk management so that, you have if you're up 3,000%, let's say if you sell something up 1,000%, you're like, oh my God, it was so great. The problem was that 3 hours earlier it was up 3,000% and I missed it. You drive yourself nuts, right? So here we held it to the end of the day and we sold the other half up about 8,000. So the combined trade was over 5,000%. These are the types of things we're looking for outside the U.S. stock market. And we've had other trades. Amazon, we were talking about in the chat room. It wasn't my idea. One of the people in the chat room early this summer was talking about how Amazon always does really well just before it splits. And I looked at it and I said, geez, that's a really good idea. I'm not going to do it, but go ahead if you want to. Sure enough, she did it, as did several other people in the chat room. They made 2,500%, 2,500% on their money. Right? It wasn't even my idea. So like I'm saying, is that it's not just me in there. We have people who are talking to each other all the time saying, hey, what do you think of that? What do you think? And people say, I don't like that idea. And it keeps people from maybe backing up the truck at the wrong time. And of course, with me, I'm not a big, some people, they said, well, geez, I put 50% of my investment portfolio into one trade. It's like, whoa, I don't do that. I 10%, very rarely do I do more than 10%. And even then less often than that. We're here to make money, build it up. You always hear these stories about some guy who made, $10 million on one trade and that's fine. But it happens very, very infrequently, even on a stock like this, people can do really well. But the point is you want to do things in the right way. There's no question there's a certain amount of risk trading options and you don't want to be betting the farm. And that's, again, another thing. We try to do things in a reasonable way. We're not here telling you, come trade with us because you'll be worth $100 million by Christmas. That's not what we're saying. What we're saying is that there's unbelievable opportunities out there. We can make money in both directions. We've been doing it all year, for over a year. And it's a great team to be working with. Like I said, all these other institutional traders, they're talking to people all day long. You should be doing the same.
Yeah, and I want to give a shout out here, Jackie. Welcome to the family. All right, Jackie, make sure everybody that is joining, make sure to fill out the form. As soon as you sign up, you'll get an email basically to put the address of where you want the laptop to be shipped to. So Matt, somebody has a question here. Are people with a full-time job able to use this chat room? You have a ton of people that have full-time jobs there, I know.
Right, yes, absolutely. And one of the things that we do is that in the chat room, we have a separate tab where the chat room is just scrolling all day long. So it's like, well, Matt said to buy this at 10:30. Well, I didn't know that. I was doing my job and I didn't see, wasn't looking at the screen right then. It's like, well, how the hell am I? Well, so we have a separate thing where it's called Matt's important posts, I think is it, but it's not all picks, but most of them are picks. In other words, that thing at any given day, you pop it up, you're going to see all the picks from that day, all the posts from that day in that separate chat room, a separate chat page. You say, okay, and it's like, hey, I was doing my job, I was picking up my kids from school, whatever that may have to be, and you came home. Oh, geez, you did this trade 45 minutes ago. Is this still a good trade? Matt, is this still a good trade? Yes, no, or hey, yeah, go ahead. I think it's still fine. Go ahead and do it. Or it's a little less attractive, but only because it's moved up and it's moved in our direction. But don't worry, it's still got a lot further to go. Go ahead and jump in. So the point is that we put all of our trades in that separate page so you can see them. You don't have to like try to scroll through 3 hours of posts to figure out when me or anybody else talked about buying or selling any security or any option. So it's so yes, it's definitely something that that many people do. I mean, we got people going to restaurants. We have a new UPS driver. He's so great, and the thing too is you learn so much from these people. I mean, the UPS driver talking about, well, this is what I'm seeing, and it's believe me, I'm going to be asking him, what are you seeing during the holiday season? Because I want to know how the holiday season is going. I mean, Federal Express has talked about how their ground volumes, they expect them to be very low this year. What does that mean about the consumer? And you have a guy on the ground who's doing that job. I want to know, and he's been more than willing to tell us what he sees. I want to see it. I know people in the real estate market. What's going on there? There's certain things about real estate that have been bad, but I've steered some people in the right way, saying this is the same as the housing crisis. Not to say that the housing market won't have problems going forward, but we don't have millions of people who have bought houses with zero money down and things like that. And that's the thing. We're constantly talking about the restaurant, and we have people. Something that was incredibly helpful in the first quarter of this year, where we made some real nice trades on the bearish side of the market. People who live in Eastern Europe, and they're like saying, no, this is what's going on. This is, I've lived here. I know what Putin's going to do. And this is not, it was just amazing how much information we got from really smart people. Believe me, there are the best hedge fund managers who would have loved to hear what those guys on the ground were saying in Eastern Europe, who literally lived there and saw what was going on. And so that's, again, it's not just people talking about their trading ideas. It's people talking about what they see in their own businesses, in their own lives. And there's other people who say, hey, and I've said this many times, it's like, hey, this is what I'm seeing. It's not what I do for a living. It's not, I don't see it every day, but this is what I'm seeing. Does anybody have any thoughts on this? And people come back and say, you're absolutely right, Matt. That's actually my business. Or they'll say, actually, you're wrong. I see why you're saying that, but it's really, that's just something that usually happens in July, whatever, but I'm making stuff up here, but so don't really worry about that. Okay, perfect. So now we've learned something and let's move together. And, it's always, whenever you see something in your everyday life, it's some of the best information you can get. But when you have people you can bounce it off, who may know a little bit better, it's just so much easier. Like I said, I hate to keep pounding away this issue, but it's something I have not pounded away of as much in the past, and I should have, is that the best professional traders do not trade alone, period. Okay? They talk to traders, they talk to other traders, they talk to their cohorts, their colleagues at their company, at their hedge fund all day long. And they're talking to brokers all day long. And you sit there and you hear about, oh, these hedge funds are talking to each other and there's conspiracy. I'm sure there are guys who do that, but I'm not talking about, I'm just talking about those people at Tiger, are honest, hardworking people. Okay. They've been wrong this year, but they're not wrong because they've been lying to people. They just made some bad bets. That happens sometimes. But that's why they're still in business, because they know they can. But whether they'll have to eventually close down, I don't know. But if they close down, it'll be because they want to, not because they have to, because they're not leveraged. They're good, hardworking people.
Right.
Good working people make mistakes sometimes.
Matt, so what are your thoughts overall on the energy sector? There's a lot of activity going on, but as far as like overall, where do you see natural gas, oil?
Well, here's a couple of things. First of all, let's just see the energy stocks. You see how this is the XLE, which is the energy ETF. Okay. And we see one of the things we have to worry about, get rid of these moving averages that don't really matter. But see, remember here, it's a little overbought. It's making a double top. The key is, I think it's going to break out of this. But since it's overbought on a short-term basis, let me just go, let's look at the weekly chart. I'm a little worried that it might have to take a breather, but I've been saying that for a week now, and the breather has just been sideways, okay? And if anything, slightly higher. You see how it's not really crazy overbought? So maybe it does break out. Either way, I love the energy sector overall. We just do not, this stuff, what's going on in Ukraine, that's one thing, but we have not made the infrastructure. We cannot refine this stuff. Doesn't matter if we keep producing oil. We can't, and we cannot turn around and start. We do not have the capacity to refine it in a major way quickly, okay? You can't do that. You can't do that this year, period, okay? So it's going to go, I think it's going higher. But the better one, now we're looking at natural gas. Oops. This is natural gas, the commodity. Now look at how this is what I'm looking at right now. So good here. Get rid of this. I just want to get rid of some of these lines so it's just not so busy on the chart here. Whoops. Okay. 2020. Again, this hopefully you can learn what the stuff that my thought process. Look at this is natural gas. Oops, let me make it bigger. Okay, this is the chart on natural gas itself. This is the 200-day moving average. The purple line is the 200-day moving average. Look how important this has been. One of the key rules is that in technical analysis is that whenever something has been tough resistance for a while, once it breaks that resistance, it flips and becomes support, and vice versa. Let's look what happened here. The 200-day moving average. Look how key and support it was for the natural gas. Bounced off it there in 2020 through 2021. It got slightly below it. Remember we talked about when things get slightly below, got slightly below, but still held and then shot up. Got right back down to it again and held again, shot right up. Then got down, traded sideways, finally broke below it. So that old support level is now new resistance. Sure enough, it got right back up to it and couldn't break above it on its first try. Didn't surprise me, it's its first try. Now it's pulled back a little bit, but now we're getting into the colder months. Now here in the Northeast, anyway, until really even until yesterday, my God, I couldn't believe how warm it was. When things finally do get cold, this thing's going to change. So what we're doing and what I'm looking at in the natural gas, for natural gas stocks, EQT Corp is one, Kinder Morgan, Cheniere, LNG is the symbol on that one. These are the ones we're looking at. Okay, we already bought them a little bit. But when it breaks back above, when natural gas breaks back above that 200-day moving average, okay, that old support is now new resistance. It's going to break out in a big way, and those natural gas related stocks are going to break out in a big way. And we're going to be in that chat room. We're going to be talking about those stocks a lot. So we're watching natural gas very, very closely, especially now that we're moving into these colder months of the year. And that in this situation, they keep talking about, geez, maybe they'll make some progress in Ukraine. I don't see the kind of progress. I mean, hopefully they will. I'm not seeing the kind of progress that will open up the gas spigots in a major way to have oil gas prices come down. And as things get cold, it's going to go higher, especially if the dollar continues to stay weak. So still remain very, very bullish. I'm not yet, because oil's getting a little overbought near term. And I'm waiting. I'm not getting real aggressive here, but we're looking for the opportunity sometime in the next week or two. It could happen tomorrow. And the same thing in natural gas, and it breaks above that 200-day moving average.
Right. So let me ask you this, man. I know that there's obviously some sort of tension between the China and the U.S. Do you think that Apple is very vulnerable, or Tesla? Do you think these companies that have a lot of assets there, a lot of their sales come from China? Do you think that could impact that and ultimately, impact the markets here?
Well, Apple, yes. Well, they're both good, but Apple. It's funny how the people saw this big rally, and everybody was saying, "Well, geez, there's two big rally in mega cap tech, so everything's great." I'm like, it's pretty well known that when the mega tech, whatever's been the big leader in the last bull market will probably not be the major leader in the next bull market. But the point is here is that Apple. It didn't make a lower low, but see, lower high, again, lower low, lower high, equal low. Can this break out above this area, maybe I'd turn more bullish. But the situation with China, Biden is going in there. He's going to be this meeting in the G20 meeting tomorrow, and he's going to be meeting with President Xi. And now that he didn't get shellacked in the elections like many people thought he would, he's feeling. You just listen to him talk. He's feeling much more emboldened and much more confident. And so he's going to be able to stand up a little bit more there. There's this whole situation with Taiwan. It's a big concern. And again, I'm not. Apple is, again, it's a great company, but it's not cheap. It's trading at 23, 24 times earnings. And you think, well, for a company like Apple, that's fine. Well, history says otherwise. I mean, the stock, every single bear market, Apple has gone into the high teens before it bottomed out. Okay, every time. Okay, so that's what you want to expect. And if the tension remains high, which I think it can and probably will, that's going to be tough on Apple for all the reasons you just mentioned, Rodrigo. So you need to be careful with them. And to be honest with you, I think you need. History tells us that when the bear markets tend not to bottom out until people throw in the towel on Apple, and they haven't done that because Apple is one of the few stocks that has not traded below its June lows. And some people say, well, that's a positive. Divergence. Well, yes, but it's never worked. I mean, in other words, every single time you look at all the past bear markets, every single time a divergence in Apple, which usually because people, it's like, flight to safety, they buy Apple and they're willing to buy that even though we're in a bear market. It doesn't hold up forever. You always flushes before the market bottoms. And I think this will flush as well. As for Tesla, this whole thing with Musk, that's just a boy, you think he's regretting that? Oh my goodness. Here's a stock that, again, look at this. Again, we talk about the technical analysis. The thing with China is they show that they admitted that orders are down. Okay, in China, that is not good for Tesla, and they need Tesla to again. I'm not saying Tesla's going to go out of business or anything ridiculous like that, but let's look at it here. I'm going to get rid of these things again. We'll go talk about the educational part. This is what we talk about. Now it's coming off of an oversold level, so it's bounced up. But look at this thing here. It broke below a descending triangle pattern. Sorry. Bang. Oops. Okay, let's get rid of that. Sorry about that. Just get rid of these names. Sorry, here. Just take me another second. But you can see how this is what we call a descending triangle pattern. There we go. And I'll blow it up so you can see it a little bit better. Bang. Okay, so we've broken below that. And see, this compared to the rest of the market, the bounce in Tesla was pretty feeble the last 2 days. I mean, we have Apple, we just saw the chart in Apple, big bounce back in Apple. Tesla's barely bounced back at all. If they're seeing problems in China, that's going to be issues. No, it did bounce back. Look how oversold it was. See, it's been oversold. The bounces have been feeble, even off these oversold conditions. So it looks to me like this stock's heading for 180, even 170. And if it gets back up to 200 early this week, we're going to be looking at some puts in that name. Again, I don't want to get, I'm not, we've heard over the last several years, people said this company is never going to last and things like that. People aren't saying that anymore, but 2 or 3 years ago they were. And that's what I'm talking about. I'm just talking about the stock dropping to 170. Musk is spending so much time on Twitter now. That's not helpful. China slow down. That's not helpful. We see the all sorts of stories about automobile demand in the U.S. overall. Forget about China. In the U.S. being down, we know that Europe is in a recession, and that's going to be a bigger one soon. So there's just a lot of different reasons to avoid Tesla. And if we get back up to 200, I'm going to be looking at some negative bits. Probably.
Yeah, man, Europe is screwed. Those guys, I mean, they're paying 10x gas. I mean, it's bad here, but over there, it's like way worse, man. Over there, right. There's going to be opportunities across the board, and that's really why I think it's great, Matt, that you have that bank of knowledge where you understand, geopolitics, you understand different markets, different sectors, currencies, different countries, continents. It does add a value there that you have more, you're able to see more opportunities instead of the average person just talking about Apple all day on the news,
Right. And don't get me wrong, we want to talk about Apple, but we want to talk about a lot of other things, because that's where you can make, believe me, and we will make money, and will make money in trading Apple, especially in the options market. But the opportunities are the ones that most people don't see, are usually the ones that make us the best money. And that's, like that FXI trade. And one of the big trades we had, again, it wasn't me, but other people did, in Amazon, which obviously is a very high profile stock. But there's so many different areas where it crops up, and we want to be there. And like I said, though, just take advantage of it. When everybody sees something as being bullish and it's become very overbought, let's take advantage of it on the downside. And people,
right?
How could you bet against that stock? I'm like, I'm not betting against that stock. I'm only betting against it for a couple of days. It's like,
Yeah.
And same thing in the other direction. So and we all know nothing moves in a straight line. And that's one of the big. It's funny for individual investors. Sometimes the hardest thing is like this, and this are all bullish for that stock. Why are you making a negative bet? I'm like, I'm making a negative bet over the next 3 or 4 days because the stock's crazy overbought. It's gone up 20% in the last 3 days. That's all. All those things you just said, they're all bullish. The stock's probably going higher, but it's become ridiculously overbought. And when all those buyers take a breather for 2 days, that stock's going to drop 5 or 6%. Their options are going to jump 100%, and we're going to make money. And so that's what we try to do.
Matt, so this, if you pull up a chart of Amazon, something that seems really interesting to me is that this thing was just sideways for like 2 years, and this is supposed to be the richest company in the world with the best numbers out there. But then I see crappy stocks that had better price action. Obviously, they're both down right now. But how come that happened with Amazon? It's the favorite from all the funds. It's the best company out there, the most money, everything, best future. Was that maybe the first warning sign, or not really?
Well, yeah, I mean, that was part of it, because this time, I mean, it's both company based too. I mean, they got the new CEO, and people want to like say, well, the new guy, he's no Jeff Bezos, and that's why the stock started flying. Now it's like he's the guy who ran their cloud business for a long time. He's a very smart guy. So, but the thing about we have to remember is that people and people forget that back at the beginning, even Jeff Bezos, he was not afraid to let to make less money and to have his stock. He didn't care about his stock going down. All he cared about was the overall business. But there's no question, as the stock market rallied straight up here, after when the Fed initially started, let's zoom this in a little bit. When the Fed initially started doing their big injection of liquidity, the stock did rally. But as the rest of the market rallied, it traded sideways. That was a big big warning flag. And then when it finally broke down, that's when we knew that the overall market was going to be a killer. But so again, these big companies are very good to keep an eye on because they're good leading indicators. And the fact that what I'm really worried about right now, it's made a lower low. I mean, much lower low, and it bounced back in the last couple of days. But what does that tell you about the consumer? Their consumer demand, and they've been saying for years, their cloud computing is the one thing that they'll always make money. Well, it's still making money, but not growing to the degree it used to. And that is a big, that should be a big yellow flag for everybody. So, but my point is, on a longer term basis, Amazon's, luckily they're doing the right things for them, not necessarily the right things for their shareholders, but doing the right things for their business. Mm-hmm. I take it back. They may not be doing the right thing for their shareholders on a short-term basis, but they are on a long-term basis. And I'm still a believer on a long-term basis in Amazon, but looking at what's going on in its stock tells you that I think that the market still has further to fall. No matter what it does over the very near term, we're going to make lower lows before this bear market's over.
Now, the other interesting stock out there, man, is Facebook. And the weird thing is that I've noticed that a lot less of my friends maybe they're using Instagram more, but I noticed that Facebook is a little bit more quiet. Do you think that when he announced the metaverse, do you think that was the official top? Or what are your thoughts overall on that? Because that's a multi-billion-dollar investment on something that already exists. Like, we already have video games. I don't know what this guy's talking about. Who he's trying to sell this to?
Yeah, and $1,500 for a pair of goggles or whatever that you have. I mean, again, you can see the stock has bounced nicely. But it was only because it was ridiculously oversold. What are they laying off? 10,000 people they announced last week. I mean, this stock, and again, can you do it for a trade? But it's one that some people that get too caught up in a certain trade, or say they get, hey, I made a lot of money in this or a lot of money in that, and therefore I'm always going to love it. Well, that's great. Always love it. Okay, but doesn't mean you always have to trade it. You always have to invest in it. Take your profits and move on. Now the stock has bounced back. It's no longer oversold, and you got to be careful about what's going on. Just what you talked about. Where are they going to make money? I've read a lot about this just in the last couple of weeks, trying to figure out how are they going to make a lot of money on this. I don't see anybody who says that they can. Now they have other areas than the metaverse where they're still making money and will make money, and this company's not going out of business. But Zuckerberg is betting on something that's way out in the future, and they obviously have, the biggest problem was again, he, at least in my opinion, he thought that, oh geez, I have all this liquidity, I can waste all this money because we'll just keep making it. And he didn't realize that even though what he did starting Facebook was unbelievable, that it continued for reasons that had to do with the Fed's liquidity, not his business acumen. And that they weren't going to, once the liquidity disappeared from the Fed, he suddenly wasn't going to have, he's spending all this money. Right, he turns around and is like, oh shit, I don't have as much money as I thought I could keep. Suddenly, okay, great, I'm going to lay off 10,000 people. He's going to lay off a lot more probably before it's over. And it's like, it's great. What you want to do, there are people, you listen to some old, I've just heard things about some old people, retired people who can't get out of their apartments and stuff, and now they're going to vacations in they're 85 years old, they're going to vacations in Europe. That's great, but that's not a big population, and it's not where you're going to make a lot of money. And I don't know what's going to happen in the long run in virtual reality, but the metaverse. But it's especially what they're charging. It's not going to be something to make a lot of money.
Right.
So it's
I mean, people are struggling to pay their rent in their physical house, and they want to sell them a fake house in a virtual video game.
Yeah,
I don't trust that kid for business. But I mean, look, Sheryl Sandberg left. I mean, the company's going through a lot of issues, but it's just crazy because, like, I hear, isn't this like one of the second biggest holdings in funds, like Facebook, that's widely held?
Yeah, and that's it's funny because it's been killing them. And again, as these guys finally say, I can't keep holding this. It's killing me. It's the same thing happened to Amazon last year. People were holding it as it traded sideways. They finally said, again, if you're a great big mutual fund and you own 100 million shares of some of these companies, I was like, well, great. They're not going to go to zero, but it doesn't matter. I mean, if they're going to go from 100 million or 50 million shares, but we're going to cut it to 20 million shares. So you've got to sell 30 million shares. You multiply that by 100 big funds. That's a lot of selling has to be done. And because for the longest time it was like, great, I'll sit on Facebook and I'll just ride it, and I can make it a big part of my fund. It's not good. And that's why just talk about, I'm going to show you one thing right here, and why we got to worry about Apple, and not worried about Apple in the terms of their business. But I mean, this is just the QQQ, which is the NASDAQ 100. All right. See this number right here? Right here. That is the percent that these stocks, Apple Computer, 13% of the QQQ is Apple. 23. So 23% is Apple and Microsoft. And Apple goes down a lot at some point because of China or anything else. What do you think is going to happen to the NASDAQ? Okay. When 13% of one stock, it starts to show real problems. And again, I'm not talking real problems like 2008, and I'm not talking about that. Just say, but what if Apple goes down another 20% for whatever reason? That's going to have a big impact on the overall market because of its weighting. Again, it's like people think about, Apple's such an important part of our business, but we also have to think about the little minutia things like this. It's like not only is it an important part of the business world and our economy, it's an important part of one index. When one index goes down in a big way and people are leveraged and suddenly get margin calls and the whole thing, turns into a real disaster. So
yeah, and so I think Apple, they froze hiring, which I mean, it was really kind of hurt the stock. But really quick on the last Facebook thing, I think they just might be too early, maybe, to it.
And that's fine. But just being early is like being early in this business. being early is being wrong if you're way early. And so this could be, again, they're not going out of business. The metaverse is not their only business. They still have plenty of sources of revenue. So at some point, this could indeed be a great play again. I mean, Microsoft was a dead stock for almost 10 years. And then for the last 10 years, it's been unbelievable. Maybe that's what happens to metaverse. Maybe it's been a dead stock this year. Maybe that dead stock thing only lasts for another 6 months. Maybe it only lasts for another 2 or 3 years, not 10 years like it did for Microsoft. But it just doesn't seem like money. Again, too many other interesting ideas for me to try to step to the plate just because if they're early, they might be way early, and I'd rather wait until I see something more, something better. I'm sorry, I'd say see something more concrete that it's going to work and make money when there are so many other things I can look at that will make money for me now.
Right. So I know that you and we've been talking about the leverage that's in the market, margin debt. Is that at a comfortable place for you right now, or is it still ridiculously high?
No, it's still very high. It's come way down, but it's still higher than it was at the last peak in 2007. So margin debt is coming down, but it's nowhere near. This whole deleveraging process takes time, and we've seen how it's moved out of the what it's done to the cryptocurrency market. But it's huge in the bond market, and it's in the stock market as well. The problem is that when so many people people start to think, well, geez, stock market has to fall a lot more before margin calls become a big problem again. It's like, well, no, because the market just moves sideways for a while. Those people are loaded on the debt. They may not get the forced selling where they absolutely have to peel back some of their leverage, but their bosses will tell them they have to. The institutional players are still very, very important. It's like, you've got too much leverage, cut back on it, and then that causes the next downturn, and then that causes the margin calls to pick up. But it tells me what happened this week in the cryptocurrency market. Tells me there's still plenty of leverage in the marketplace, and it's something that again, markets. People talk about. Excuse me. That why do we always have to have a washout move? Well, people think it's because people just throw in the towel and sell. It's actually no. What happens is that it only happens after a market runs a big way. The market rallies in a big way, people add a lot of leverage. And when it sells off, they have to take off that leverage. And then once the market gets fairly valued, okay, let's remember I talked about how markets never stop at fairly valued. There's a reason they never stop at fairly valued, because on the way up, they got too over leveraged and too overvalued. When on the way back down, once they reach fair value, they have the margin calls, because margin calls don't come at the top. Margin calls after the market's sold off a lot. And that's why you always go to undervalued, because the margin calls come in because of too much leverage. We still have too much leverage in the business. Until that's really washed out, we won't get there. And that's the one thing that people saying, well, geez, every time this has happened, every time the stock market, every time since World War II, every single time, one perfect record, the stock market has become undervalued. The stock market is traded less than 15 times earnings. We're not even close to that yet. So the only way we can go back up from here is if not only the Fed pauses, it has to move more than pause. They got to start a new QE program and take interest rates lower. I just don't see that happening with the inflation situation. And this whole thing about the inflation is completely behind us.
Yeah. So I saw. So the market kind of took that. It was, I mean, you could say it's good news, but it's such small good news. But for such a move, I feel that the market was just maybe so desperate for any piece of good news.
Right. And then what happened was a lot of these big cap tech names have become so oversold and overshorted. Some short positions have built up and they got squeezed. But I mean, you're trying to tell me that the NASDAQ traded rallied 9% in 2 days. Is that CPI that was barely better than expected, and still way above any level that we've seen in the last 40 years. And that the demand destruction, the demand side of inflation is starting to come down. The problem is most of the inflation is supply induced. So it doesn't matter how much demand. It's what happened in the 1970s. The 1970s, it was a supply issue because of the OPEC embargo, and didn't matter how much demand went down, prices were going to remain high. Oil prices were going to remain high. We're in a similar situation now with oil and food because of what's going on in Ukraine and because of the lack of investment in the energy sector in the last 10 years. And so no matter how much you kill demand, the inflation can only go down so much. I've been saying for 6 months that yes, inflation is going to come down, but it's not going to plateau. I'm sorry, it's going to plateau at a much higher level. And everybody says, well, no, usually when inflation comes down, it drops right down and goes back to where it was. I'm like, no, that's only over the last 40 years, because over the last 40 years, every piece of inflation, every bout of inflation was very short-lived and wasn't very big. Why? Because it was in demand induced. So when they got rid of the demand by raising interest rates, it came right back down very quickly. This is a situation where it's skyrocketed way higher, and it's all because of supply issues. And I just said in the 1970s, everybody gives Paul Volcker all that credit for killing inflation. It wasn't. It was the Iran-Iraq War. The Iran-Iraq War began in the early 1980s, and they stopped the embargo. They just said, we're going to sell as much oil as we need, both of them, because we have to pay for our war. Oil went down through the floor. It had nothing to do with the Fed raising rates. So the Fed is helping inflation, keeping inflation from getting more outrageous. But until we have the situation in Ukraine really calm down, I mean, really, right. We're not going to get rid of that. That's just.
So we have $31 trillion in debt, the highest ever. The service of that debt is higher than ever because of rates. Do you really think that we should get back into QE? Is that just the way that things have to go? Because we're just stuck in a never-ending problem, it seems like, right?
Well, that's the thing but we can't just keep doing that forever. That's the problem. Is that the QE program of you can't just go QE forever, because then you're guaranteeing inflation. Okay, because the when you have all this liquidity going into the system and people can just buy anything, inflation, that will create more inflation again. You can't have that. You can't. The Fed. Everybody talk about the Fed's trying to kill inflation. Yes, that's a big part of what they're trying to do. They're also trying to get the markets back in balance with the underlying fundamentals. At 22 times earnings that we had at the beginning of the year, the market was way ahead of the fundamentals. All these idiots were trying to say that it wasn't, but they were wrong. And of course, that's come to fruition with a big sell-off. But we're still trading at 17 times earnings. You can't QE. Well, that's why they want to shrink their balance sheet. So then, when we actually have another disaster, another emergency, they will be able to do another QE program. Because if they with a $8 or $9 billion balance sheet, you can't keep doing that forever. At some point, the bubble bursts. You can't stay on steroids forever without killing the patient. Okay, without killing. If an athlete stays on steroids forever, they kill themselves. Okay, and that's what the Fed, they knew that, and they knew long ago that once they added all that liquidity, they did all that liquidity because the economy stopped, almost completely shut down. So they purposely pushed asset prices to artificially high levels to keep things buoyant while the economy could catch back up. The problem is they kept it. They started here. The economy started catching up, but they kept the liquidity going. So now they have to. But now it's coming down. The economy's turning back down. Everything. It's just you can't. Sam Zell said it last week on TV so well. You cannot provide unlimited amounts of liquidity, free money, without consequences. These are the consequences. This is the fight. This is the hangover we have to go through. And the people denying that we have a hangover and that we'll continue to have a hangover are kidding themselves. And that's why we have to still be careful and worry about markets going lower. It's okay. It's actually the right thing. The hangover sucks, but it's going to allow us for the markets to get back in line with reality and to do better in a longer term basis. But for people, wishing that we don't have to go through the tough stuff is just stupid. And we have to go through it. You have to take your medicine, and that's what we're doing, and we'll continue to do it. Let's profit from it rather than fight it and complain about the Fed, while it's going on.
It's just how it is. So okay, so the cost of servicing the debt is higher, and let's just say, these things have been thrown around there. I don't know how valid they are or not, but will the U.S. be able to repay all its, the people it has to pay? And if they are unable to, will they just end up printing more money?
Well, then you worry about hyperinflation, and that'll happen. But also look about, you talked about the servicing our debt. think about all the corporate debt we have, over about $11 trillion of corporate debt out there. And so much of that debt, okay, was taken on just to buy back stock. Okay. So usually and historically, people would go, I'm going to borrow money. Corporations go borrow money. They build a new plant. And guess what that new plant did? It made money to help them service their debt. But that's not what's happened in the last decade. They bought back stock just so that because they could keep the stock up and give them, and the CEOs can give themselves nice bonuses. Right? They didn't invest that money. That debt did not go into anything that would help service the debt. In other words, it didn't go to rebuild the business, bring in more revenues to help service the debt. So now we go into recession and their debt level is here. Their interest payments are set and they're set lower. But at some point, they're going to have to roll over that debt at higher levels, and they don't have any additional income to pay for it. All right. So defaults and things like that, that's going to become a problem. That's been one of the biggest problems of the last decade, was all this buying back of stock market and all these perma bulls on Wall Street, on CNBC and Bloomberg saying, look how great it is. They're buying back debt. It's like they're buying back stock. They're like, buying back stock. This buying back stock is great if they're using their proceeds from what their businesses. What they were doing was, because it's like, hey, we've got all this money. There's nothing more we can do with it. We're going to buy back our own stock. Fine. Okay. If you're borrowing money to buy back your own stock, and you're adding debt that's not helping you service that debt, all you're doing is it's like, killing, pushing the can down the road, whatever I'm going to say it, taking money from our children, et cetera. It's just they made CEOs and senior executives are like, great, the next generation is going to pay for it. What do I care? Right. That's what we're starting to see now. So this whole debt thing is a big problem.
Yeah, no, absolutely. So, a lot of people on the news are like saying that the economy is strong, even though savings are below pre-pandemic levels. And even though you could say wages are up 3%, inflation is up 8%, and gas is up like almost half, rent's up through the roof. Do you really think the economy is strong? What makes an economy strong right now in this situation?
Yeah, the only people saying the economy is going to turn around is because it's like, well, the inflation is going to come down in a big way, so therefore the Fed will ease, and therefore the Fed will stop hiking, and therefore everything will go great. And I'm like, the economy is getting worse. I mean, we know the economy is getting worse. You see what's happening in the semiconductors. All their orders are falling through the floor. All the semiconductor stocks, they bounced back recently because they were oversold, but their business sucks. Every single company reported lousy numbers with poor guidance. And what do they make chips? What goes into chips? What do chips go into? Everything. Cars, your cell phone, you name it, chips go into it. Chip demand is way down. That's all I keep talking about. Demand is down. The economy is slowing. The only way the consumer has been able to stay up is by going under their credit card. Credit card debt is now back at an all-time high. The savings rate is back down to the levels it was in 2008 during the great financial crisis. Remember, it spiked higher in 2020. Now it's just crashed back. The consumer is not as in great shape as people say. I mean, look at, Federal Express is already saying the holiday season is going to be as good as people think. And so the economy's not getting better. And we have a stock market that's trading at 17 times earnings. Those earnings are going to have to come down because we're going into recession. Like I said, every recession since World War II, we've seen a decline in earnings. So if earnings are going to have to come down, the stock market has to come down further. It's these people are living in la la land. They believe that that what the Fed did was they don't realize that the Fed was the one that helped them make all that money. It wasn't their smarts. And once they come to the realization that the Fed's going to go back, take things, their goal is to get things back to fairly valued, is going to take more than a year, and that's what's going to cause us some problems. So again, I don't want to sound overly bearish here. I'm not calling for the end of the world or anything like that. But what I'm just saying is that last week's rally gate, because it had, the market was short and got squeezed, and some big tech stocks got squeezed, and it may go further higher over the very short term. But longer term, we're going to have a lot more volatility over the next at least 6 to 9 months, and we want to be able to take advantage of it in the chat room, and that's what we're going to do.
Well, yeah, I mean, even though, and it's a bittersweet thing, but even though the economy is doing bad, you can do well in the chat room, because it doesn't matter really if it's going up or down. You trade both ways. So, but really the point is actually knowing what's happening. like being real about like what's happening out there, and not sprinkling anything, being transparent about what's really happening out there in the economy. Because most new traders will, just believe whatever they see on the news, like that, instead of looking deeper, right? Taking a deeper look into things.
Exactly. That we're going to come out. Believe me, there's going to be a time when people are on the news are finally saying everything sucks and the world's coming to an end, and maybe not that quite that bad. And that's when we're going to be in there buying. Okay, when there's blood in the streets, and that you hear about how there's all this bearishness out there. There is, to a certain degree, but people have not thrown in the towel by any stretch of the imagination. And it's just something where it's going to present an unbelievably great buying opportunity. We want to have the cash, not only that, the confidence to do it, because we'll be making money on the way down. And then because so many people, when the market bounces back on an ultimate bottom, for the first 3 years after the great financial crisis, money flowed out of funds, of stock market funds. Why? Because people are like, oh, finally, I got a little bit of bounce. I sold. We're not going to be doing that. We're going to keep buying all the way up, and it's going to go higher. And it's going to be like buying in 2003 and 2009 all over again. I just don't think we're to that level yet. And we're going to make money. And again, so if you have the confidence at those lower levels, you stick with the trades rather than bailing on them very quickly. And there are people who bought stocks in 1932, 1973, 74, all those stock market bottoms, who retired 5 years earlier than they thought they were going to, because they not only had the money, because they had some money on the sidelines and some profits on the sidelines, but they had the confidence to stick with it. And that's my whole goal here, not just in the next few months, but in the next few years.
Right. And what do you think is different from this recession? You've been through the 87, the 90, the 99, the 07, the credit thing, the rate thing in 2016. You've gone through a lot of these periods, Matt. What is really different about this one?
Well, this one is what I would say. This one is different than in that, hopefully, at least, the banks seem to be in much better shape than they were in 2008. So that's good. But I compare it very much to what happened in 2007, very similar, because back then we had the thing that took the market much higher was excess liquidity that made everybody think that they were much smarter than they were, and that we had a new normal of technology and the new economy and everything. And they flooded the system with liquidity because of the Y2K issue, which meant that the computers were all going to, when they went to 00 in the year 2000, all their computers were going to think that it was 1900, not 2000. 1900, okay, great. So your bank account was going to have the same amount it had in 1900. Most people weren't alive in 1900, which meant their bank account was going to go to zero. So they spent billions of dollars for over 5 or 6 years. So that all the global central banks flooded the system with liquidity behind the scenes, pushed the market to ridiculous heights. As soon as it was over, and they were a month into 2020, to 2000, they realized they had fixed the problem. They pulled the liquidity, and the market went like this. Well, the same thing happened this time. This time the market, the system was flooded with liquidity because of the pandemic and the global economy. It's shut down. And now that they're shutting off the liquidity spigots, things are going back down. And so what happened in 2000, 2003? It actually wasn't, we did fall into recession. It wasn't a horrendous recession, but it was still a recession. It was still a tough time. The stock market went down 50%. The NASDAQ went down 80%. Now, in this case, because the liquidity was only there for 18 months, not 5 years, it didn't get as, it went to 22 times earnings rather than 30 times earnings. So it won't fall as far, but it's still going to fall further than it has so far. It's still going to cause a recession. But when we come out of the other side, but the economy might not, and I don't think will, fall into the kind of real deep recession that we saw in 2008, 2009. Instead, it'll be it'll still, I think it'll be a normal recession, which will still be tough, but it won't be a complete disaster. It'll take the S&P down 35 to 40%, in my opinion, and that'll be an unbelievable opportunity. But the thing is, recessions are normal, bear markets are normal, and the thing is to embrace them, not fear them, trade them as well. And bear market rallies happen all the time. There was a lot of them in between 2000 and 2003. We just think this is another one that's taking place now, and we want to be able to take advantage of it.
Yeah, they could be pretty long. So it is possible to have a weakening economy and good employment numbers. And has it happened before?
Well, I mean, yes, but I mean, the thing is, the economy is going, the employment numbers are going to weaken. They just aren't weakening to the same degree because, again, we don't have the same we don't have the same kind of major crisis we had in 2008 when the banks were insolvent, right?
Mhm.
In 2003, the banking system was fine. I'm sorry, in 2000 to 2003, the banking system was fine. So even though we had a very deep bear market, and even though we had a recession, it was nowhere near as bad as it was 6 or 7 years later. And so, yes, to answer your question, yes. But again, it goes down to this thing too, is that it's stagflation. Inflation remains high, the economy slows. It's a problem. The other thing we have to remember too, when interest rates roll over, long-term interest rates, okay, interest rates go up. When we see that a recession's coming, when we say, oh, geez, interest rates are going up, that's going to hurt the stock market. Then interest rates start to roll over because they see the recession. Okay, that doesn't signal a bottom for the stock market. Interest rates, long-term interest rates shift from an upward trend to a downward trend in the middle of a bear market, not at the end of one. So be careful about being overly bullish if interest rates roll over here, which they might. Anyway, yeah, we should wrap things up. I literally had surgery 3 days ago, so I got to go do some physical therapy and stuff. But as you can see, I'm very, very passionate about the markets, and I think most people 3 days after surgery wouldn't even think about doing a webinar like this. But I think the markets, the last 2 months of the year are going to be, and I think well into next year, are going to be volatile and really going to be. Really be tough. I don't know if you heard that. If you can hear the vibration, I keep pulling down my things because I have my little vibrating socks on here. That there, I believe it wasn't serious. I had my hip replaced, so it's not like a life-threatening issue here. But but like I said, I just thought to myself, geez, do I really want to do this on Sunday? And I said, no, I've got to, because it's just there's too much going on, and I just think that people need to see what's really going on, especially after this big rally last week. It could last, and believe me, we might be long and making some more bullish bets early this week. We'll see what happens, and this rally could last several more weeks. But I think it's a bear market rally, and when we're in a group, in a chat room with people who are talking about it constantly, then you have a better idea of what you want to do. And I just think, again, like I said, we've done very, very well this year. I think we'll continue to do well. But the best thing you can do if you want to be an active trader is work with a group like ours. And we're not, and again, this is not 30,000 people trying, who we don't know who anybody is, and they're sending out, they're trying to, pump and dump, run up a stock so they can dump it. We're telling you what we're really doing. I'm always telling you what I'm doing. I'm not hiding anything. And again, I put those trades, the specific trades, into the chat and into the other page in the chat room, so you know exactly what's going on. And it's such an incredible time in the marketplace. It's what we have to go through, because we did what we had to do. The Fed did what they had to do and got us into this mess, but they had to, because the economy had completely shut down during the pandemic. This was always going to have to be a big problem. It's now a bigger one because of the invasion, because inflation became much bigger because of the war in Ukraine. But it was always going to happen. Okay, so let's, instead of fighting it, let's embrace it, make money out of it, and then when it's over and the market becomes undervalued, then we're backing up the truck and we're buying a lot of money and we're retiring earlier than we thought.
Right. And Matt, did you want to go over any stocks, or did you want to just go ahead and just leave it here and I'll go?
No, I really do have to. I do really have to run here. I'm sorry. I was only supposed to go an hour and a half because of my doctors, but I gotta do some stuff. But I apologize, but I do have to do some physical therapy and at 3:00. So and the person's here. So
all right.
But well, we'll do this, and we'll do another webinar again soon. But I hope you guys will consider joining us. It's an incredible time in the marketplace, and for those who have who like to trade actively, it has been and will continue to be a really great time, and not one where you're just the victim and standing back passively getting beaten up every day, where you can take control of your own destiny and move on.
Yeah. Absolutely. And I'm going to go over the live room here to show you the trades from Matt, if that's what you're seeing. So I'm going to stick around here showing you that. Everybody, we got to give a big shout out here to Matt Maley, the man of the hour. Let's go ahead. Let's go.
Damn, son, where'd you find this?
All right, man. I hope you
Thanks, buddy.
recover, man.
We'll see everybody in the chat room, and we'll talk to you soon, Rodrigo. Great to see you, buddy.
All right, man. I'll see you in the chat room, dude.
Okay.
Matt Maley, there you go. Chief market strategist, amazing individual, super smart. If you think, somebody was asking, do you guys talk about education? Like today, like we went over so many things today. I learned a lot of things. I know that you guys also must have learned a lot of things there as well. If you do want to join the chat room, please make sure to use the link in the chat that we're putting. I'm going to go over some of the trades here from Matt, but I have a lot of questions on how to join. And look, we're not realistically able to get through 1,000 questions here in the little time we have and go through Matt's analysis. But if you do want to do that, with him the entire day, you can join the live room, right? And we have the link there for you so that you can do that. And I'm going to post it for you just in case there. And then we're going to get back here to the trades, folks. All right. But I know there's no way that you guys did not learn one thing today. I know somebody here, you guys learned at least one thing. At least one thing. I learned several. But again, this is why it's important to not trade alone, to really find that sort of community, right? A community that you see is like a legit community, right? And you have a great mentor like Matt Maley. It's his chat room, really. Like he is the one that runs it. And the session is on Tuesdays. It's from 11:30 till 12:30. That is on Tuesdays. And then you have the live room where he's at the entire day, Monday to Friday. So if you're trying to learn, there's no better place for you to do this. Don't try to go teach yourself from just like random, YouTubers or things like that. And I'm not saying to learn from me or anything like that. I'm saying learn from Matt. Like Matt is the guy that you want on your corner. He's been right all along. And he was even, and we didn't talk about this actually, but he was very, very bullish on commodities when everybody else was not. And he made a banger trade. Keep in mind, he's a chief market strategist at Miller Tabak. So that means that he provides research and analysis for institutions to make decisions, right? Trading, investment decisions. So Matt basically provides that, and they charge millions of dollars, and you are getting this. Well, you're getting the same analysis for trading with Matt plus 1 hour of his day throughout the week. And keep in mind, you're going to see him on Bloomberg. You're going to see him on CNBC because he's always out there. And he's probably one of the few people that I will tune in to watch CNBC. Because typically, I don't watch that at all. And I got way better trading once I did that. But then when Matt is there, I will look at what he's talking about there. And he will give you guys a heads up in the chat room before he does go on the news. So, and he's not giving out picks. Like the picks that you're getting on the chat room, they're not anywhere else. So those picks are just for the chat members, okay? So that means that if you're in the room with Matt, that means that you're the only one that's getting those trades. Mickey Fade, what's up, dude? What's going on? A1, the plan is for the metaverse to be the only place you want to be. I don't think it's going to work either. Yeah, the metaverse is just, I think that already exists. There's no reason to reinvent it. So if you do have questions on the live room, okay, make sure to put them now because we are doing the, like the whole thing here, right? So if you sign up while we're live, you will get bonus trades, bonus strategies from Matt Maley that are not included in the regular, live chat room, right? I'm only including these for the people that join while we are live, okay? So we have to give a couple shout outs here to the folks that did join, okay? We have L.E. Ferreira. Welcome to the family here, L.E. Big shout out to you. Let's go. We gotta make it official. Let's go. 1, 2, 3. All right. So Ferreira, make sure to check your email. You're going to get something that says like laptop delivery, something like that. Just make sure that you put the address that you want the laptop to be shipped to. Okay. That is a courtesy. Okay. It's on the house. It's on me. We will be getting rid of these laptops very soon. So you will not see these laptop promotions in the near future. So we are getting rid of that. But for the meantime, you are getting it. And if for any reason, like you can donate it, you can sell it, do whatever you want with it. You don't have to return it. It doesn't come with any special program, really. You don't need a special program to use this platform. All you need is internet. Okay. It could even be from your phone. It could be from your laptop, your iPad. I know a ton of truck drivers that are in the chat room, and they're doing their normal thing. They're driving and they have their iPad right there on the console, and they're getting in on Matt's trades. They're not, look, if you want to make money, you can't just like, you have to put some work into it. You have to put some effort into it. You know, like I know so many people that have full-time jobs and are part of the chat room and make every single trade. So don't think that just because you have a job doesn't mean you can do this. If you can have a Windows open to check your Instagram or to check your Gmail, there's no reason you cannot have a window dedicated for these trades that are actually making you money, right? Like it is, money just doesn't fall on your lap. It just doesn't. You have to, and it's not really a lot that you have to do. Just have a window open and that's it. So everybody can join this. As long as you have internet, you can be from any part of the world. I've signed up people from Pakistan, from Finland, from Australia, from Africa. I have a lot of Nigerian friends that for some reason, a lot of people watch us there. We have a ton of Canadian users, a lot of people from all over the world, really. Hawaii, it doesn't matter really. The chat room is open 24/7. Okay, so you will be able to take advantage of this. Now, the other thing I do not want you to do is to trade alone. And don't try to like wing it, because this is not the same market that we had in 2020, where everything was going up because, you know, QE forever and everybody was making money, right? But then I've seen and spoken to, well, since I've been here, I've talked to maybe like 8,000 traders around there from all over the world. And it's been great. But then, you know, it always comes down to the same mistakes that we all do. You know, we're all, you know, extremely overconfident. We're all extremely anxious to get in there and make money, like if it would be that easy. And some people might get lucky, like everyone in 2020. But then now you're looking at all these traders that were in 2020 that unfortunately, you know, have either have their accounts blown up, right? Or let me know if you guys can still hear me. But yeah, you see all these traders from 2020 that are in this market now and they don't know what to do. And they never took the time to either learn what the Fed is, or like what rates do, or what's all this stuff. And I remember very, very clearly about a year ago around there with Matt, we were talking about stuff with the Fed and rates and things like that. And I remember there was this one person who was like, the Fed doesn't matter. I just want stock picks. And I just thought like, wow, man, that reminds me of me when I started. And personally, I can tell you, I've blown up my account twice. And it's not a good feeling. I don't want anybody here to go through that. And that's really why we are here doing this, because we know we're going to help people out. That we have about, let's see how many people are live there right now. So right now there's 47 people online. It's a Sunday. They really shouldn't even be there, right? It's Sunday. But again, it's international. We have people from all over the world, people with full-time jobs, full-time traders, part-time jobs. It doesn't really matter. If you want to make additional income, you have to find a way to do it. And guess what? You don't have a clone. You don't have any more. There's only so many hours in the day that you can work. And if you already have 2 shifts and you work all day, there's not much more you can do, right? So this is really like a lifeline to people, right? All over the world that want to empower themselves economically, right? Not only by really understanding what's happening in the economy and how you can use that even in your regular job, but also how you can use what's happening in the economy to profit from it. And again, we're just traders. Obviously, we don't want the world to collapse. We don't want any of these bad things to be happening, but they are. But that doesn't mean I'm going to be losing money because somebody else made a bad decision in our policy, right? So you have to start taking control of your situation. Just because things are bad out there doesn't mean they have to be bad for you, right? You can take control of this stuff. And number one, the most important thing is, yes, making trades and making money. I get it. Yes. But also it's the education part of it. If you don't know what's going on and you're just making trades, you know, that's fine. You can do that. I'm not, but I personally think that the learning aspect of it is so much more important, because then you're going to be able to replicate these trades on your own. And you're going to be there with a great community. You're going to have Matt Maley there all day. And we have a ton of mini Matt Maleys. All these people here. Let me just go over some of these users. Peter, I signed him up last week. What's up? We got Derek in the house. Let's see. I recognize Monty. What up, Monty? I don't know if Monty's watching, but I signed up Monty, I think like 6 months ago around there. But I know a lot of these people, Last Mile, Trading Zone. I know like 90% of the people that are in this chat room I've signed up, or they signed up through these sessions. And they're all amazing individuals. These are all real human beings, real traders that are looking to, be able to profit from this market. And it's very easy for retail traders to kind of get sidetracked with different things. But if you have the right mentor, if you have the right community, if you have the right technology, like we have here in these chat rooms that, by the way, these chat rooms were built here in-house. These are not some cheap Discord chats or, any of that stuff. I do want to give a quick shout out here because we do have a lot of people that do work behind the scenes on this stuff. A big shout out to Neil, Harvey, Tammy, Vin. We have a lot of people that really make sure that this chat room and these sessions are always happening. So a big shout out to them. So, and some folks are asking about, okay, Philip, let me go over your question here. 1 second. Okay, Philip, you subscribe there. Let me go over this quick, Phil. I lost my train of thought. But yeah, these sessions, keep in mind, none of this stuff is scripted. I don't have a script. I hate scripts. I'm never going to do scripts. Everything has to be natural. And as you can see, if you go anywhere else, you go check the news or whatever, these people are reading from a teleprompter. Their job is to just read. Like if somebody gave me a piece of paper and to lie, I'm not going to do that. So I think that's really the value here that we have, that as retail traders, we can congregate as a community and just be real about stuff and how we can profit from it, right? Nobody likes being lied to, obviously, especially being getting lied to and then losing money because of that. So ultimately, as a retail trader, you have to take care of yourself because nobody cares about the little guy, unfortunately. Everybody's out there to screw the little guy, 100%, hands down. Brokerages don't care if you make money or lose money. They're still going to make money out of that. So they don't care. Why do you think they let you go in there with $500,000 and just buy crazy calls and options with no trading, no nothing? It's because they make money out of that. So, and that's their business model, right? You have to be aware of that. Now you got to understand how things happen here, right? We depend on your success. Your success as a trader is equal to our success as a community, right? As a service or whatever you want to call it. So if our members are doing great, then we're doing great, right? So that's really why we are incentivized to help you become a better trader, because the more you learn, the more profitable you become. That's when you're really going to see the value, right? So that's why we offer this for all you guys. Philip, I'm going to give you a shout out too, bro. Okay. Because I know you've been a great sport here. Let's go. Big shout out, Philip. Welcome to the family. Let's go, baby. Rick Knorr. Yeah, we're kind of getting started here. So, Rick Knorr, the chat room's up like over 300% since we started last year. And I know because I launched these chat rooms. Every single chat room, every single big package you see here, I launched it here with Benzinga. And I was here from day one when we launched the chat room, and it was just me and Matt. There's nobody else. It's just the two of us. And then, little by little, more members started joining and taking advantage of this. And then I thought, wouldn't it be great to give members a meeting with Matt, like a live meeting at least once a week. And it started as a 15-minute thing. And then it became a 20-minute and then a 30-minute. And now it's like a 45 to 1 hour thing. Keep in mind, this is a chief market strategist that you have on demand, like at your fingertips. You can be on your phone, just pop in there, ask a question, sorry, or just check the trade. I mean, when the type of trades that we're doing, they're very volatile. And if you want max profits and minimum losses, I really suggest that you have this open or at least on your phone. But if you have a trade, don't just go out and buy groceries and forget about it. Like you have to know that like if you're in a trade and the trade is moving quick and there's volatility, you have to have have an eye there, right? It doesn't really hurt you to get like a $50 monitor on your desk and have this. And we're even giving you a laptop. We're literally even giving you a laptop so that you can have that laptop dedicated for the chat room open. There are no excuses here, folks, for anybody here to join. I swear, there's just no excuses here. So Rick Nord, that's your answer for that, for the return. And keep in mind, Matt is not going all in. Matt goes probably 1-2% of his account on these trades. We're not going 10, 20, 30, 50%. And that's a mistake that, I personally have made. A lot of people, other people have made it. I know every mistake in the book. Not only have I done it, but I've talked to 8,000 traders that have done them in different ways. And, there's a million ways to lose money in the markets if you don't know what you're doing. You can get as creative as you want, but ultimately that's really why you need an instructor. That's why you need a mentor. Like, what's the last time you went to a university and, gave yourself a certificate of graduation, for a neurosurgeon? Like, no, it doesn't. That's not how it works. You have to, like, that's why, you have an instructor, you have a teacher, you have lessons, classes, and then you have a final exam, whatever. But if you want to skip all that, and just because you're anxious to make a couple bucks, you know why? You're basically rushing to losing. You're just rushing to lose money. That's and I can't do anything but keep it real. So I'm just being honest. Like, if you're new and you're trying to wing it, don't do it. And I don't want to say I told you so. I don't want to say I told you so. I want to say thanks for joining, and you start learning and improving your portfolio. So if you haven't seen the results that you were looking for this year or the year before, or, I know traders that have been losing money for 20 years until they actually do something about it, because they try to wing it. They try to self-teach themselves. And, if you try to wing this, it's just, the chances of you blowing up your account are pretty high. Let's just be honest. So my suggestion is to not trade alone, find a good group, find a good community, so that you can actually do this and you can make money while you learn, instead of, learning by blowing up your account. That's, unfortunately, a lot of people go through that, but you shouldn't. And that's kind of what we're here. So I'm going to recap some of the things that we went over, so that you guys don't have any other questions. One second, folks. But this was probably the best session that I've ever had here with Matt. We covered so many things. It's ridiculous. Mervin says, Matt is awesome. Jack Fork, love the show. We love you too, brother. 1 second, folks. I just need to post something here quick. Okay, we have a new member here. Got to give a proper shout out. All right, Philip, we already gave you the shout out. We have Rick also in the house. Let's give Rick a proper shout out. Let's go. Everybody welcome Rick, in the chat. Welcome, Rick. Welcome to the family. Let's go. All right, Rick. So for all you guys that joined and are joining, Mr. Rick Parsley, good to see you, man. All right, 1 second, folks. And we're going to talk a little bit about the stuff here. I'm just kind of, taking care of stuff in the back. Now, somebody was asking me about a lifetime. If you want a lifetime, make sure to send me an email. It's the only way you can get it. Okay. And I'll post that contact for you there. Hold up. So you can text me, just text me at this number and say, I want the lifetime. And I'll get in touch with you, because this will expire at midnight. Rick, notifications are posted in real time. Yes. So whenever Matt, okay, I was just showing you some of the members. This is my good friend, Felicia. I believe she's a realtor. And I think she joined, I think it was like either at the beginning of the year, I don't remember. She's a great person, day trader mom. She's been there a lot. Let's see who else I can recognize here. Paul delivers. So we have remember we were talking about a UPS guy? We have somebody that works at UPS, and he was like, hey, like deliveries are a little bit slower. This is that guy, Paul delivers, which is the funniest name this guy could have put there. So you can put your own username there you can put your own username there. Here we have Susan, another great trader here. I remember when she joined here, putting something about the dollar. Again, these are smart conversations, folks. We're not talking about, AMC or, short squeezes or none of that stuff. Like, this is really what's going to make you a better trader. So just by the education, you're going to get way much more than what you're worth for what you're paying, honestly. Keep in mind, you have a chief market strategist on demand the entire day. We got Corey in the house. Good to see you, Corey. I know Corey as well. Jeb, Ben. I mean, this is basically like my second family, you could say, like the people in the chat room. Okay, so now let me tell you where you find the trades. Okay, one thing, you do have sound alerts here. So you see these bells. Let's say I click all, you see they're yellow. Okay, if I take them off, they're not yellow anymore. So that means if I want to have sound alerts, you just put that, right? Now, I honestly only put them for Matt because otherwise you're going to have hundreds of little bops, like alerts. Because there's two chat rooms, okay? The inner circle chat is where everybody's posting. And then Matt's important messages is where only he is able to post. And that is a recommendation that I put in so that we can make the chat room a better experience. Because I was seeing that a lot of members weren't able to find Matt's chats because they were just lost in between all the conversation, questions and answers. So I talked to one of the developers and he was kind enough to do this for us. And he basically made a separate chat room where only Matt can post. Only Matt can post so that you can find all of his trades literally right there. And you have a timestamp, okay? As soon as he will post this, you will get that sound alert notification. And we are in the very near future about to release push notifications. That means that you download the app and you're gonna get a push notification sent to your phone as an alert. Obviously, I believe the price will be higher whenever that comes out in a month or 2 months. But if you join right now, you don't have to, you'll be locked in with that price. So even if the price does go up, which it will, you will pretty much be locked into this 70% off, okay? Okay, 1 second, folks. I'm just getting some questions about the lifetime. So I'm just gonna post that link in there. Yes, everybody gets a laptop. Yes, Timmy. So as an example, if maybe you have a work computer and you don't want to have it on your work computer, we're giving you a laptop. If you don't have a laptop at all, we're giving you a laptop, right? I mean, if you don't have a monitor to have like Matt's chat room open, we're giving you the laptop. So we're doing everything in our power and our control here to pretty much enable you. Not only we're giving you the technology, we're giving you a laptop. Next thing we're gonna pay for your college tuition. Like, I mean, this is as much as we could do to help you help yourself, right? You have to we're giving you 50% and then you do the other 50% because nobody can do that other 50% for you. I saw this number where like when you're trying to go to school or something, 30% is the school, then the instructor. The other 70% is how you deal with adversity, how you overcome challenges, what kind of dedication you have for it, how bad do you really want it. Those are all things that I cannot control for you, right? Those are things that are in your control only. And we don't have motivational speakers here to keep you pumped, but we do have a great community that can actually help you understand that, hey, you're not the only one, right? Everybody struggles with things. That's part of becoming a better trader. Like there's a saying that calm waters don't make a good sailor, something like that. And that's true. Like, how are you really going to be experienced and well if you've really never done mistakes? How are you going to learn if you've never messed up? All these great inventions in life, many of them, like scientific, came out of a mistake. You try 1,000 things that don't work until you find the one thing that works. That was how the light bulb was made, I think. So yes, you're gonna have like not every trade wins. Obviously, we're not saying that every trade is going to go to $1 million or nothing like that. You will have losing trades. That is part of trading, just like part of life. You don't win always, but you just got to make sure that you win more than you lose. The same thing for trading. You will have losers, you will have winners, but ultimately you want more winners than losers, right? You got to control your losers and manage your winners. So, will you sign my laptop before it is sent when I sign up? Do you want me to sign it? It would have to come to my place and then I'll sign it and then I'll ship it to you. But I've never gotten this request, but I mean, if you want my signature, I'll give it to you there. Deal? Okay. Well, I'm going to have to talk to the people in the laptop department so that they can get this going. So yeah, really, when it comes down to trading, folks, there's so much information out there that it's really easy to get overloaded with a bunch of crap you don't need, honestly. Like, at the end of the day, the best way to do it is with an instructor. It's been proven. Like, that's why we have schools. That's why we have teachers. They're not there just, to fail you or just to take attendance. They're there to help you, right? Ideally. So basically, look at it this way. you have a teacher, you have a trading mentor, educator, and also a market analyst, a chief market strategist. We're not talking US equities, we're talking global equities, okay? Understanding China markets, Japanese markets, Indian markets. I know it sounds like I don't care about that. And look, you don't have to care because Matt cares. That's his job. He's a chief market strategist. So he is already doing that. He's been doing that for 40 years. He was 25 years a trader and then 15 years an analyst. And you don't really get those kinds of people out there because analysts, they tend to think a certain way. Like, for example, if you compare an accountant, you already know what the typical accountant, how they are, right? It's just like, just like somebody in sales and somebody in marketing, they think totally different. They're wired differently, right? And usually they're not, for the most part, they're just good at what they do and that's it. They're a one-trick pony, right? But when you find these individuals in your life that are able to be good in different sides of things, that's when you're like, okay, I got something special here. And I noticed that with Matt, because I know a lot of analysts in Wall Street. I know a lot of economists. My dad's an economist from Harvard. I know smart people that are like economists and things like that. And when you talk to like an actual trader that's been doing this for 40 years, they have different skill sets, but they really don't kind of mix, if that makes sense. Because what you do in life determines your personality. Your personality determines what you will be good at, I feel, right? So Matt has this really, really good ability that he's able to analyze markets, right? As a chief market strategist, and he's able to find winning picks. He's able to find solid trades, giving entries and exits. And we're not talking 10 years investing. We're talking like short-term trading for individuals like you and me, for the little guy. Remember, nobody cares about the little guy. Nobody does in reality. But that's really why I was so passionate about starting this chat room with Matt, because we're able to provide something that is not being provided out there in the markets, out there, because like as a trader myself, I'm not a reporter, I'm not a journalist, I'm a finance major, I'm in finance 10 years, that's what I do. But I can tell you that being in a group of traders, okay, will totally change the game for you, because your learning curve is probably flat or even going down when you're listening to the wrong people. Once you get into the chat room, your learning curve is just going to start going so up. And these are things that you're not going to learn in college. They don't teach them in college, probably because they don't want you to know. But that's why we're here, right? This could very easily be a class in a curriculum in college, right? But they don't, like college doesn't teach you to be a CEO. They teach you to be a worker bee. And what we're doing here is we're trying to teach you to think like a CEO. Because that's what it is. You're running your own trading thing, right? We want you to actually have that perspective of this, right? This is your trading. You have to take control over it. But we are here as a community giving you everything that you need, the technology, the picks, the mentor, which is an amazing mentor. It's the smartest person we have here, in my opinion. 40 years in Wall Street, Salomon Brothers, which was the biggest trading desk in Wall Street for the 70s, 80s, until they got bought out. Then at Merrill Lynch, managing two of the biggest funds in the world for BlackRock and Fidelity. And then you have him being a chief market strategist, which is an analyst side for Miller Tabak. And I know I don't personally know, but I know of other great people that have been in Miller Tabak and in Salomon Brothers. And let's not even mention Merrill Lynch. Like, come on. So the fact that Matt is able to bring all his skill sets to help you, the little guy, okay, is something that doesn't exist. I know, because as a trader, I've tried a lot of crappy services that were just garbage, pump and dump chat rooms, all these things. And, these are mistakes that you make because you're new. And it's very easy for a marketer to pitch you a dream, on an email or something. But this is really why I love doing these sessions, because you can see it for yourself. I didn't stop banging Matt with questions back to back to back to back. And he knows his stuff. You just know that he knows his stuff. So if you think the session was cool, imagine having him every week, okay, for 1 hour in the live room, right, for the Zoom call, which we only have with the members, but also having that chat room open 24/7. Like, when you have this thing open 24/7, I guarantee you that by the time, the whole year thing, you're going to learn a lot. Okay, you're definitely going to learn a lot. So for the folks that are asking, make sure that you are, just make sure that you're actually using the link there, okay? Make sure you're using the link to join, because that's the only way that you can get the whole deal we've been talking about with the laptop, the live session on Tuesdays, the chat room 24/7. If you join while we're live or by the end of the day, you will get additional trade ideas. You will get additional picks from Matt. So I'm hooking you up here, right, folks? So I think, all right, so we're getting, all right, hold up. I was not checking the YouTube chat, but let me just answer some questions there. Hold up. Okay, so Jack, we got Jack in the house. So let me just give him a quick shout out there. We got Jack in the house. We got to give him a shout out. Welcome to the family here, Jack. Let's go. All right. Okay, folks. So this has been a great session. I've been here for 2 hours and 30 minutes already on a Sunday. Okay, on a Sunday. So this kind of shows you the type of commitment that we have here to making this work, to making this the last, okay, subscription you're ever going to get in your trading career. This is the last, because this is all you need. This is all you need. Matt is all you need. Okay, so the community is great. The technology is great. We're going to keep putting push notifications out very soon. And you're going to have that live session with Matt, and that's Monday. The live session is Tuesdays, 11:30 to 12:30, and the chat room is open 24/7. But you have access to Matt Monday to Friday, 9 to 5 p.m. So you have a chief market strategist there the entire day with you. Okay, he will give you a heads up before he goes on the news and all that stuff. But don't worry, he's not giving out picks like chat room picks. Okay, the picks that we have in the chat room are just for the chat room members. Okay, just for the chat room members. So I think that does it here for the day. I had a great time, great session with all you guys. Make sure that if you have questions about the lifetime, send me an email so that you can actually qualify for it. And Chris Lysak, I sent over, okay, perfect, dude, perfect. Send over the email, and big shout out to all you guys for being here. I appreciate your time, your participation. I definitely had a blast. I learned a lot. And if you do want to continue learning, it doesn't have to finish here. It doesn't have to end here. Join the chat room. Matt is there the entire day, literally. So big shout out to you guys. Have a great day. Happy weekend. Stay safe. And we'll see you tomorrow in the chat room. Just make sure that for everybody that signed up, fill out the form, right? So as soon as you sign up, there's a form that you have to fill out with the address of where you want the laptop to be shipped to. So make sure that you fill that out, because if we don't have an address, there's no way to send it, you know? So just make sure that you fill it up. If you don't get it, send me an email and I will forward that to that department. And we got to make sure that SG gets her laptop signed by Hot Rod, which is totally possible. And I think we're good for the day, folks. Have a great day, Rick Nor. Thanks for joining. I'll see you in the chat room, dude. Here and there, I will pop in the chat room. But I do make Matt's trades as well myself. As long, you know, sometimes I'm slammed with work, I can't. But then when I'm trading, I'll go into the chat room because I trust the guy. I've been following him for 2 years. I launched the damn chat room with him, and I know his picks from before. So I do put a lot of trust in Matt, and I know all the hundreds of other people we do also do that. TB, how long does it take to ship the laptop? So we're going to send that to you. Well, we need the address first. So just make sure that once you join there, TB, make sure that you actually fill out the address. Give me 1 second here, folks, before we do the stuff here. Hold up. No, Ryan, only the members will get that. Okay. All right, TB, I sent you a message, a private message there. Feel free to reach out for your specific question. I think we covered everything. Last call. Okay, this is the last call. It's officially the last call. If anybody does have questions about the laptop, the chat room, Matt Maley, strategy that we're doing, this is your time to ask before I wrap this baby up here, okay? So I'll give you guys like a minute or something like that while I just take care of some stuff here on the back. Because like my day is just starting, you know, like I have a lot more stuff to do now, but okay, Rick Parsley, remember to fill out the form, okay? Everybody else that signed up, make sure you fill out that form. This is the last call to ask questions about the room, about the strategy, about Matt, about the laptop, whatever it is, like this is it. You have me here right now. And I think it's better to answer questions if we're here because it's kind of quicker, you know? Okay. Ryan Stover, what's the offer? Okay, Ryan, I put it there in the chat. And I think I mentioned this, but in case you didn't get it, anybody that joins while we're live, while I'm live here, while you see this person here, will get additional bonus trade alerts and strategies from Matt Maley. They're not included in the live room. I'm hooking you up. That simple. Okay. Akaton, it's definitely not a MacBook. But that's a good joke. Okay, so make sure, Ryan, once you see that, once you click on that link, actually just so there's no confusion, let me just open it here. So you guys see what it looks like. Today was a great session. Like I still can't believe it. I can't believe what a great session we had. Okay, so I already purchased this, so I can't, you know what? Let me open this in an incognito thing. So even I already purchased this. Like, I don't know what you're waiting for. Okay. So this is what this will look like. Once you click on the checkout for Matt, Jack Fork, good question. Where do I fill out my address? You're going to fill out that address in there's an email that is going to be sent to you. Okay. And it's going to be sent to you after you sign up. It's an automatic email. It's not like, you know, we send it here. It's automatic. So you sign up, make sure to check your junk and your spam folder. And once you get that, okay, make sure to fill it out. That's the most important thing. So, all right, so this is the checkout. This is how it's going to look like. Take a quick look at it, folks. I just need to do something here really quick. I'm not leaving. I'm not done. I'll just be back here in like 30 seconds. All right. Okay. Just have to take care of my cats. So, Ryan, you got it. What did you get, Ryan? You got the link? Okay, Ryan. Can you send me an email? Let me send you my email. Hold on. Okay. Yeah, if you're already a member, I can hook you up. So, Jack, just make sure you fill out the form in the email. Okay, it's going to be sent to you. So this is the normal price. It's $6,000. That's the normal price. We have a coupon that I gave you only if you sign up while I'm live. Okay, that is 70% off. And you can see the final price there. Okay, that's the final price. And then you just place order there. Okay, make sure to send me the email though, Ryan, before we finish here. So David's a real homie. Okay, I know David. I signed him up. Very smart dude. Let's see what it says. The entire room is extremely positive, supportive. Okay, so Ryan's a great dude, and look, there's a ton of great people out there. David is one of them. And so this is only. I just want to let you guys know. Okay, the 70% off is only for the next 10 members that we get. So this updates automatically. But again, just know that the discount is applied. So make sure that when you click on that link that I posted there, make sure that you see that, okay? Make sure that you see that the coupon is applied. It's a 1782. And okay, Shannon, I see your email, by the way. Yes, if anybody does have questions about the lifetime, you have to email. That's the only way to get it. So you have to email me if you do want that. I'm gonna post this contact for you guys. Yeah, Jeremy, I agree. This was probably the best session I've ever had here with anybody. Especially because of what's happening out there in the markets and how honest and transparent Matt is about all this stuff. And it's something that I can vouch for. Like Matt is definitely, he's a real guy. Okay, 1 second, folks. We have a couple of new faces here. Big shout out to Sarah. Welcome to the family here, Sarah. Let's go, everybody. Welcome, Sarah. Let's go. Let's make it official. All right. So Sarah's in the house. Who else is in the house? I'm literally just trying to hook you guys up here. That's why I'm still here, because if you join while you're live, then you get more stuff. You get additional trade alerts that are not included. You get additional strategies that are not included. And, you know, why pay for it if I'm giving it to you for free? You know what I mean? Like, take advantage of it. So you will have access to all that stuff. Remember, it's for the year. It's annual. The only way it's not annual is if you get the lifetime, which for that, you have to send an email. I did get your email, Greg, about that. So I will make sure to reach out to you on this. Like I told you guys, my day is literally just getting started. I'm working 7 days a week here. So I'm going to be reaching out to some of you guys. I'm going to be emailing all this stuff. And we're going to be in the chat room tomorrow. It's going to be a fun day. I mean, I can tell you, like, and any day can be a great day. Okay. Any day can be a great day. You never know what day is going to be the day that you get that home run slammer. You just don't know. But I can tell you that you're not going to do it if you're doing spreads or butterflies, or if you're buying stocks or penny stocks. The numbers are just not there. The math is just not there. The only way you can do it, if like, these kind of numbers, like, several 100 percenters, 1,000 percenters, like the only way you can do that for real is with this type of trading. I've already tried every single type of trading you can think of: penny stocks, options, spreads, butterflies, crypto. Well, actually, I've never bought any crypto in my life, and I'm proud. I am a proud crypto hater. No, I'm just kidding. But I never bought any Bitcoin. I never bought into that stuff. I trust stocks, even though it's not a perfect world. It's more perfect than crypto, I feel. And even if you want to trade crypto, you can trade stocks that trade crypto. You know why? Like, because I don't want to buy something on a Coinbase or whatever, on a Voyager, and then I wake up and they go bankrupt, and then I lose all the money I had there. What the hell, So like, I'm not going to expose myself to that. That's just being stupid. So my suggestion is to trade the stocks like Coin. Coin follows Bitcoin, and if you short, basically it literally goes just with it. So if you buy puts on puts on Coin, it's the same thing like shorting Bitcoin. And there's other stocks out there like Mara, Riot, all these stocks. I remember when they were like $2 and they went all the way up to like $80. And guess what? Now they're back at $2, $3 around there. And these things happen in the markets, right? And it was a huge pump. And now we're having a huge dump. And if you don't know how to make money both ways, just get out of the game, honestly. Because if you've been long, if you only know how to go long because you're a nice guy and you would never dare to short anything, then you're just going to end up losing all your money. And this year has been great for me because I've been shorting a lot of stuff. I've been shorting the NASDAQ, doing a lot of trades with Matt, actually. And if it wouldn't be for that, then, it would be a different story. And for a lot of traders out there, we've been going down for the past like 6, 7, 8 months. I don't even know how long. And if you haven't been able to like finesse your shorting strategies, and I don't mean shorting a stock, I mean buying puts. If you haven't been able to do that properly, if you don't know how to do that, then you're smoked. Like, you're going to get smoked out there. And I know a ton of people that have gotten smoked, not because they're bad traders, because they're just one-dimensional traders. Like, I can only be bullish. I cannot have a negative thought about the markets, even if we're in a recession. No, I have to be positive. That has nothing to do with trading. It has nothing to do with trading. You have to trade the charts in the market that you have in front of you. You can still have a positive mindset. Like there's nothing wrong with shorting, like buying puts on a stock. Ultimately, you're trading to make money, right? If you're trading to lose money, you might as well donate it to charity. And that's that. If you're literally doing irresponsible trades, and if you're blowing up your account, you're literally donating all your money to Goldman Sachs. That's exactly what you're doing, or to your brokerage, whoever. But they're milking your account on that. So I think it's time that you guys realize how this market works and how you can actually benefit and profit from it. Even if you have to buy a call or a put, these are the most simple types of trades that you can make. There's just no more simple type of trade you can make, because look, you can either do like a call or a put, and that's the most simple type of trade. But then if you are doing spreads and butterfly, or maybe you don't even know what you're doing, like you're just trying to figure it out, like you have to really kind of understand that, like when you're doing those types of trades, like spreads or butterflies or condors, you're risking, let's say 400 to make 100, and that's your limit, that's your max profit. So you could be, you know what I mean? So like what the whole purpose of this is that these are simple trades for beginner traders. Guy's here. What up, Guy? How you doing, brother? Lifetime Aza, yes, I can include it for you. But you have to make sure that you email you send an email there, okay? Again, I'm going to repeat this in case you didn't listen. The only single damn way you can get that lifetime is if you email rodrigo@benzinga.com. That's the only way, all right? And I will hook you up, don't worry. Ryan from Hawaii, what's up, brother? This is the same Ryan from the chat? Okay, nice. But yeah, folks, just make sure that you have your phone next to you, because I will be calling some of you guys. If you have questions about the lifetime, I'll hit you up. Just send me you can also just text me and say, I want the lifetime or something like that. You have my number there. If you want to get the annual, you can still do it. It's totally fine. I can still upgrade you to a lifetime. That's for you, Rick, and all you other guys. It's still possible, right? Now, okay, I think we have to give a new shout out. I just have to. I didn't think I was gonna stay here this long, honestly, but Anna Raisman 6, welcome. Let's go. The family just gets bigger, and I love it. Again, I told you this is my second family. Like I launched these chat rooms. They have like my name all over it, and I can tell you that it's the best chat room, the best options chat room, like that you're ever gonna see. Not just because of Matt, right? I mean, Matt is obviously the chat room, like he is, like the reason why you're getting it and everything. And I get that. Like I would, like, if I wouldn't be like here at Benzinga, I would totally buy the chat room. Like I'm telling you, because I know Matt, like I've known him for years now. And I know that he's got his experience very, very like on point. I mean, you just can't make that kind of stuff up. Like when you have experience, that's the one thing that you can't buy. Okay, just think about that, right? You cannot buy experience. You have to live through it to know it, right? And hearing something here and there, that's not experience. Living through things, experiencing them and getting through them and overcoming those challenges at that particular time, that's why experience is so valuable. Some people don't care about experience, and that's the biggest mistake a lot of people make and will make in their lives, really. But like experience, that's the one thing you can't buy. So you have to appreciate it if somebody has it. And that's why I appreciate Matt, because he's got 40 years in the game. 40 years in the game. All right. That's longer than what most of you guys have even been alive, including myself. I've only been trading for like 3-4 years. Matt's been doing this for 40 years. And trust me, the level is different. Me trading 3 years as a retail trader is nothing. He's been trading at the highest level as a head of trader during the early 80s, as a director of trading in Merrill Lynch, managing the 2 biggest funds in the world. It's pretty accomplished man. And then he's an analyst for Miller Tabak, where he provides institutional research and analysis for other institutions that are looking to get his sense. Look at it this way. Carl Icahn called this guy up, called Matt, and they've been talking on the phone for a while. And you know, that happens when you're on the news and you're actually talking facts, when you're talking truth, when you're like, and Matt says that he's a contrarian. Yes, he's a contrarian because most people were wrong and have been wrong and are still wrong. And Matt has been solid. He's been solid all this time. Like, he literally called this market crash on point. And I remember the exact day, the exact session that we had, and it's clear as day. You know, it was that day that Nadella guy from Microsoft sold so much of his portfolio for Microsoft. And, you know, insider buying was a record insider selling was at a record. So it wasn't just that guy from Microsoft. It was people from all different companies that were basically, you know, selling all their stocks. So Matt is able to really call things as they are. And I really do appreciate that, because you really don't know what you're getting these days on the news. You got to keep in mind that they're just looking out for their sponsors. It's probably Citadel or who knows who, multi-billion-dollar hedge funds. Those are their customers. So they cater to them. But then keep in mind, I'm not sponsored by Citadel. I'm not sponsored by crypto.com or by Bitcoin or any of these companies. I'm sponsored by the little guy. If you think about it, that's who sponsors me. That's who makes these events possible, these seminars possible, the little guy. That's why we're here, to help the little guy. You know, remember I was telling you all this stuff. It's true. It's really true. So, so yeah, folks, I think that we've had a great session here. My camera died, but that's fine. So I got a couple of questions here. Asa Kinzel, make sure to send out that email. Ryan, I did get your email. Okay. So that's all good. Ryan, okay, I got that. Greg, I got your email too. Let me just make sure that people on the YouTube side are not being ignored. DJD, got to send an email. Jack Fork, send an email that you didn't get it, but please make sure you're checking your spam and junk, because many times it's going to be there. Okay. DJD, what's up? I'm putting my contact there, DJD. Send me an email and I'll contact you about it so that we can get it set up. But folks, this is probably, again, one of the best sessions that we've had here with Matt Maley. So just know that if you have questions on the room, you can contact me, you can email me. It's gonna be tomorrow morning when we will be starting our trade day. So Matt Maley is gonna be there in the morning, very early, okay? And my suggestion, my humble suggestion is that you should be there early. What's up, Jesse? I see you there on the YouTube side. My suggestion is to be there as early as you can, probably 8:30 a.m., 9 a.m., because tomorrow will be a pretty intense day. Nobody knows what's going to happen, but there's going to be volatility. There will be volatility. There's no way that tomorrow is a chill day, okay? And in the chat room, we trade volatility. Volatility is our best friend. It does not matter if the markets go higher or lower, we will be trading them. So you don't have to be a bull, you don't have to be a bear, you just have to be a realist. That's it. You have to be a trader. DJ Dispatch, P Wu Dao. So the price you're seeing on the link is for annual. The 1782 is annual. For the lifetime, I'm putting my email there. All right, let me just put this again here in case you guys don't get it. All right, so DJD, so the circle is mainly for options trading. That is correct. Yes, we are not there trying to do complicated stuff. We're not there trying to do spreads or butterflies or condors or diagonals or verticals or whatever else you think about. This is the most basic type of trade that exists for options, right? And again, we're talking about buying calls, buying puts. Again, folks, this is the most most simple type of trade you can make, right? It doesn't get any more simple than that. And I guess I wasn't showing the whole screen, but this is the checkout. So if anybody does have questions, you know you're in the right place, okay? When you see this checkout, you're going to put in your email. All right, so the next 10 members will get 70% off, okay? You put in the email there that you want to use to join. You have the discount applied. Normal price is 6,000. We're doing it for 1,782 for the year until midnight, okay? And the other thing, you just put in the coupon's already applied. You put in your info there, you place the order, and then you're good to go. Once you sign up, you will have immediate access to this room, this live room, okay? Where you get all of Matt's trades, okay? Okay, so it looks like Matt was saying that for those that are in Europe, I will be on the CGTN Europe network just after 12 noon. I will also be on CNBC Monday afternoon at 2 p.m. I think that's 2 p.m. in the second hour. So Matt's, I mean, he's known around the world. I'm not kidding. I'm telling you, this guy he's on top of his stuff. And as a trader, I really think it's important that you trade around people like that. You know, you find people that are at that level. So, all right. So all right. So we're going to do a last call here, folks. If anybody does have questions on the room before we kind of wrap this baby up here, and get going, because I got some people I have to call. Okay, Aza. I don't know if I got your email yet, Aza. I could double check for you. Yeah, man, we put a lot. Well, yeah, I mean, put a lot of work into this, Ryan. I mean, I don't know anybody that's gonna sacrifice a Sunday to be here, just talking markets with you guys. Just doesn't happen that often. Okay, folks, so I think that kind of makes it all up there, folks. If you do have any questions, make sure to reach out. You can contact me at this number that I'm putting there on the chat. It's been a pretty good session there. Feel free to reach out if you have questions, folks. Have a great day. Happy trading, guys. And I'll see you tomorrow in the chat room. Just make sure, you know, fill out the form, all that stuff, your address for the laptop, and make sure that you can be there tomorrow, right? We're going to go through a lot of stuff tomorrow. So it's important that you guys are there early for everybody that joined. Let me just check one more thing here. Okay, perfect. All right, folks, sounds good. So I'll see you guys tomorrow. Have a great day. Thanks for being here. This is Rodrigo signing out. I love you guys, and I'll see you in the chat room. Have a great day.